Yeah. Good evening, my dear students. Hope all of you are doing fine. Hope all of you are studying well, and hope all of your preparation is very much on track for the examination, what you're going to give in a few months' time. So welcome to the third session on GST. I have been taking two sessions were concluded, one on Tuesday and Thursday. And this is the third session what I'm going to take. And today we are going to talk about the chapter number 3, which is the charge of GST. When I say the charge of GST, we are going to talk about what exactly is GST on which, what exactly is the supply on which GST is to be levied, what is the concept of forward charge mechanism, and what is the concept of reverse charge mechanism. These are some of the important aspects we will be discussing in today's session. And also we will touch upon section 10, which talks about the composition levy, which is supposed to assist small scale service providers and so small scale businessmen, traders and manufacturers. So we are also going to see about section 10 in great detail. So that is going to be the coverage of today's session. So before that, let us recapitulate what we have learned till now. We have seen the constitutional provisions leading to GST. We saw what exactly is, how exactly GST came into existence, what were the amendments which are required to be made to bring GST into the country. And moving forward, we also saw the concept of supply, the taxable event, section 7 of the CGST Act 2017, and the various schedules, that is schedule 1, schedule 2 and schedule 3 to the CGST Act 2017. For the listeners who are watching this video for the first time, I would sincerely request you to kindly watch my earlier 2 videos, which are recorded and streamed on YouTube, and kindly go through those videos and then come back to this, because some of the sections and some of the provisions what I'm going to discuss may have a relation bearing to what we have discussed in the previous 2 sessions. So therefore, those are my inputs for now before we start off the session. And also for the persons who have attended the previous 2 sessions, if you still have some queries when you have revised the topics what we have covered, please feel free to post it in the chat box. It shall be my pleasure to take the questions and help you answer the questions and answer the queries with relating to what we have discussed till now. So therefore, as we all saw in the first session, GST is an integration of the previous indirect taxes. It is something which resulted in a combination of whatever indirect taxes was there before. And the taxable events, there were multiple taxable events prior to GST, which has now become a single taxable event, which is supply. So therefore, what is important for us is to understand the concept of intrastate supply and interstate supply. The reason being is, before GST was introduced, when VAT was there, it was solely taxing the intrastate purchase and sale of goods. And there was a central sales tax which taxed the interstate sale, that is between 2 states if there is a sale, that was subject to central sales tax. And of course, your service taxes, there was never a controversy with regard to the place from where the service is provided, because services which are provided within the state and services which are provided outside the state, everything was subject to a flat levy of what is called as a service tax, because the entire tax was collected by the central government. But now the importance of understanding the intrastate supply and the interstate supply becomes even more critical, because now even services are have come in the coverage of your GST. So since the services come in the coverage of GST, the states also have an authority to collect the tax on the supply of services. So there arises an important question. How do you determine which state gets a share of the GST which is charged? Whether you're providing the service from one place to the other. So since it is a destination based consumption tax, it will go to the state where the services are received. But services which are very intangible in nature, you never know when the service is provided to a person who's outside the state or within the state, because it is intangible in nature. It basically lies on your expertise and your qualifications based on which you provide the service. So therefore, what is important here is understanding the concept of interstate supply and intrastate supply. So if you understand this concept, then you slowly get the intention of the legislature as to why it why it is this is critical to understand, because based on this you have a separate chapter in GST which is called place of supply. In the place of supply provisions, the section 12 and section 13 of the IGST Act 2017 give certain clear principles as to how do you determine the place of supply in case of various situations. So therefore, in that particular background, we have to first understand what is the intrastate supply and what is the interstate supply. Of course, we will not be covering place of supply now because that is a separate topic which should be covered in a few days time whenever the sequence of chapters gets completed. So therefore, place of supply, the understanding of interstate supply and intrastate supply is relevant for you to get the exact concept of the place of supply. That is precisely why this interstate supply and intrastate supply are relevant for us. So therefore, what is an intrastate supply of goods or services? Where the location of the supplier and the place of supply of the goods or services are in the same state or territory, it shall be treated as intrastate supply of goods or services. So the main critical point which you have to understand is there are two determinants. There are two factors which are important for us to know whether it is an intrastate supply or whether it is an interstate supply. So where the location of the supplier and the place of supply are in the same state or the union territory. Now, when I say location of the supplier, it is defined in the GST law. Location of the supplier can be wherever his registered office is there or wherever his, we will see the definition also shortly. And when I say place of supply which is clearly given in 12 and 13, we have to take that into existence. So an important point which you all have to remember that these two determinants or these two factors cannot be concluded based on common sense. Right? It cannot be concluded based on common sense. When I say location of the supplier, you should immediately go to the definition and see what the definition says. Accordingly, you conclude what is the location. When I say the place of supply, you immediately go to the place of supply definition, place of supply concept, and whatever is given there, that shall be taken as the place of supply provision. So therefore, a constitutional understanding and a legal understanding is important for us to conclude these two determinants. Of course, once you get these two determinants, once you know where is the location of the supplier, and once you know where is the place of supply of the goods or services, in case they fall in one state, it is an intrastate supply of goods or services, right? So next, of course, so therefore, what is an interstate supply? When the location of the supplier and the place of supply of goods or services are in two different states, right? Location of the supplier and the place of supply are in two different states or in two different union territories, or one is in one state, the other is in the union territory. In that case, it shall be treated as an interstate supply of goods or services respectively. So everyone, please kindly make a note here that the two determinants for understanding or concluding whether it is an intrastate supply or an interstate supply is the location of the supplier and the place of supply. So these two we have to clearly identify. Only then you will know whether it is an intrastate supply or an interstate supply. When it is an intrastate supply, CGST and SGST are charged. When it is an interstate supply, IGST is charged. That is why it is important for us to know whether it is an intrastate or an interstate supply. Right? So before we go to the definitions, let me see if there are any queries. Tejo Akash Mati, good evening, sir. Today is my first listening session with you. Looking forward for a great session. But Mr. Tejo Akash, I want you to please listen to the previous two sessions. Only then you listen to it. Unless, of course, you have an understanding of the GST before, you've already attended some classes before, then it is fine. But I would sincerely request you to kindly refer to my first two sessions and then you come to this. You can listen to it if you have a basic conceptual understanding of the subject. Good evening, Janki. And good evening to all of you. So nice to see all of you here. So now we come back to our discussion. So as usual, let us look at some important definitions before we go to the main sections. Electronic commerce. You see, a few years back, was there a culture of apps? Was there a culture of business being done through an electronic means? If I say 10 years back, if you could believe that you could order some food in through an app which reaches you in 30 minutes, people would think that you're kidding. People would think, no, that is impossible. How is that possible? We used to actually go to the restaurants, wait for the parcel to come. We used to pack that food and come. But now we have an app which brings food right to your doorstep. We have an app where you can get transported anywhere within the city. You don't have to rely on the erratic behavior of the auto rickshaw drivers. So you have ability to book a two-wheeler. You have an ability to book a bike. You can sit behind the driver and go from one place to the other. All this has happened because of technological advancements, the startup technical wizardry which our country has produced. All this has been contributing factors to the development of e-commerce over a period of time. So that is why thereby what happened? When service tax was there were just two people involved in any transaction. One is the service provider and one is the service receiver. But after e-commerce came into existence, apart from the service provider and apart from the service receiver, there was a person, there started developing a person started to develop who is going to get both of these two together. If you book a cab, a driver and a passenger come together. If you book a restaurant, you order something in a restaurant, the restaurant and the customer who's ordering the food, they both come together. How do they come together? Because of an electronic commerce operator. Because he has started the app, you are registered on that app. So you book something, it comes. The other example is Urban Company. Urban Company connects you. You want an electrician, you want a plumber to come and do your household appliances repair work. You immediately book it and they come. So therefore, what is happening here is, apart from the service provider and the service receiver, there is another additional person who is actually collecting the fees, from the customer, and he is paying that respective service provider. So therefore, here an interesting point is, the service providers usually are from the unorganized sector. When I say unorganized sector, they are drivers, carpenters, electricians, etc., who do not want to get registered under GST for life because they feel it is a very complex exercise, and of course they can't afford the compliance cost as well. So therefore, the government thought on introducing the respective tax on the e-commerce operator, putting the liability on the e-commerce operator to collect the tax. That is why the definition of electronic commerce is important. So therefore, in few cases, the liability of discharging the GST is neither on the service provider nor on the service receiver, but it is on the e-commerce operator. So therefore, the definition of e-commerce is important for us. It means the supply of goods or services or both, including the digital products over digital or electronic network. When I say digital or electronic network, it can be through a website, it can be through a mobile app or anything for that matter. Electronic commerce operator means a person who owns, manages or operates a digital or electronic facility or platform for electronic commerce, right? So therefore, in this issue here, we have to know that whoever owns, operates or manages the digital or electronic facility or platform is basically an electronic commerce operator. So these two definitions are important for us, because when we discuss section 9 subsection 5, right, that is the section which relates to the electronic commerce transactions. That is when this point is important to be understood. The other important definition for us is section 22 subsection 6, aggregate turnover. Aggregate turnover means what? It means the aggregate value of all the taxable supplies. So taxable supplies, whatever you're basically supplying the goods or services, the total value of such supplies has to be taken here. Exempt supplies, I'll come to what is written in the bracket in a couple of minutes. Exempt supplies, the supplies which are not chargeable to GST, but when you're calculating aggregate turnover, you have to include them also. Export of goods or services or both, fine. Whatever you export, that also has to be taken. And interstate supplies of the person having the same PAN number. Yes, in previous class we discussed in a few lines that in GST, if a person having a single PAN number has two different businesses in two different states, if a person having a PAN number is only one for each company. If he has businesses in two different states, as per the GST law, he has to get himself compulsorily registered in each of the state. So therefore, if he provides supplies, if there is a supply of goods or services between those two states of the same person, that is what when I said interstate supplies of persons having the same PAN number. So same PAN number he is sending from one place to the other, one GST number to the other GST number of the same person. That also has to be included in the definition of aggregate turnover, but excludes the central, state tax, union territory tax. Of course, when you are calculating the turnover, you should not include the GST what you are charging on that. You have to only include what is the turnover, right? So this is the definition of aggregate turnover. Now let us come to what is written in the bracket. Excluding the value of inward supplies on which tax is paid by a person on reverse charge basis. So first of all, what is reverse charge? Please bear in mind the initial, the way GST has been framed is that it has to always be collected on a forward charge mechanism. When I say forward charge, supplier is providing the goods or services to the recipient. Supplier has to collect the tax from the recipient. Supplier has to collect the tax from the recipient. Supplier has to pay the tax directly to the government. That is your basic forward charge mechanism. But in certain cases, the obligation of paying the tax directly to the government, the obligation of paying the tax directly to the government is on the service recipient or the recipient of supply of goods or services. So therefore, I am a supplier. I provide services to the recipient. I don't charge any GST from him. I don't charge any GST from him. I am providing a service worth 1 lakh rupees. 1 lakh rupees he gives me. On that 1 lakh rupees, that person will calculate the GST tax. Let us assume it is 18%. That 18,000 he will pay directly to the government. So therefore, he will pay directly to the government. Right? So therefore, in this particular situation, I am providing the service to him. Okay, I am providing the service to him, and on that he pays the GST directly to the government. So therefore, for me, it is an outward supply. For him, it is an inward supply. So for him, when you are calculating the aggregate turnover, whatever amount he pays on the reverse charge basis should not be considered for the purpose of your definition of aggregate turnover. So that is why it says excluding the value of inward supplies on which tax is payable by a person on reverse charge basis. So therefore, inward supplies is there. On that, the person is paying on the reverse charge basis. That amount will not come in the aggregate turnover. That is the exclusion what he is given. So 2 subsection 6 is the aggregate turnover, which covers all these particular aspects. Now, why is this aggregate turnover definition important for us? Number one, it plays a role in determining what is the threshold for the GST registration. It also plays a role in determining what is the threshold for the composition scheme. Therefore, that is why the term aggregate turnover is important for us to understand. That is why we are reading this definition. Then, of course, the next one, customs frontiers of India. It's a limit of the customs area. You will see this definition in great detail when you cover the Customs Act. Okay, after G is also Customs Act in your paper 8 indirect taxes. So just for understanding us, customs area, why this is important for us, because import of goods is considered to be as an interstate supply. So customs area is the area of a custom station or a warehouse, included any area where imported or export goods are ordinarily kept before clearance, right? So therefore, this we will cover in great detail in the Customs Act, right? So what is reverse charge? We just understood what is the reverse charge. 2 subsection 98. Reverse charge means the liability to pay the tax, right? So the liability to pay the tax by the recipient of supply of goods or services, or both, instead of the supplier of such goods or services, or both, under 9 subsection 3 or 9 subsection 4. Right? So therefore, in case of reverse charge, whatever the recipient is liable to pay, that comes under this. Instead of the supplier, if the recipient pays the tax, that is your reverse charge basis. So that is the concept of reverse charge. To subsection 10, IGST Act, import of goods, with its grammatical variations and cognate expressions, it means bringing goods into India from a place outside India. So from outside India, if you bring the goods into India, it is known as the import of goods under the IGST Act. Please remember, this definition 2 subsection 10 is as per the IGST Act, import of goods. To subsection 56, India means the territory as referred to in Article 21, that is your 29 states and your union territories, and the territorial waters, seabed and subsoil underlying such waters, continental shelf, right? These are all technical terms. Again, all of this you will see in the Customs Act in a very, very clear manner. Airspace above the territory and territorial waters. I'm not going very deeply into what exactly these technical terms are, because you will anyways cover all of this in your Customs first chapter, basic concepts. Right? There is another concept called non-taxable online recipient. When I say non-taxable online recipient, it means any government, local authority, government authority, any individual or any other person not registered and receiving online OIDAR services in relation to any purpose other than commerce, industry, or any other business or profession located in taxable territory. So what is this OIDAR services? When I say OIDAR services, now, since the world has now become more small, when I say small, so persons sitting somewhere in the US, persons sitting somewhere in the UK provide the services to the Indian citizens by way of cloud computing, by way of different softwares, etc. So therefore, here, a person who's sitting here, I can procure the service which is provided by a US or a UK entity. So that is what is your online information data access retrieval services. Therefore, a person, so this why this point is important, because this is covered here. The taxability of OIDAR services is clearly given. So whenever a person outside India provides to a non-taxable online recipient, that is an OIDAR services, which is again subject to GST. So there a term called non-taxable online recipient is used. It means the government, local authority, individual or any person not registered, okay, who is not registered under GST and receiving OIDAR services in relation to any purpose other than commerce, industry, or any other business or profession located in the taxable territory. Explanation again, for the purposes of this clause, expression government authority means an authority or board or any other body set up by an act or parliament or a state legislature or established by the government. So this is basically a government authority, an explanation which is given with 90% or more participation by way of equity or control to carry out any function. So government authority means any function which is entrusted to a panchayat or a municipality, etc., with 90% or more participation of the government is your government authority, defined under 216 of the IGST Act. Now, before we go to section 7 of the IGST Act again here, which you have to see, let us see if there are any queries. So that means for every business, he will have a different GST number. No, not for every business, every state. So if he has a business, it can be a single business also. Let us take an example. If a furniture showroom is there, he has opened the furniture showroom across the country in different cities or states. So in each state, he has to obtain a GST registration, right? Each state, he has to obtain a GST registration, even if it is the same business. If different business in different states, compulsory. Different states means compulsory separate GST number has to be there. Sir, what about the situation in one state, you have two registrations? It is voluntary. That means if you want, you can have one registration. If you want, you can have one registration and carry multiple businesses in the same state. But if you feel, no, if there are different types of businesses in one state, I want separate GST number for them, you can go for a separate GST number. It is up to you. Voluntary basis only it is required if more than one GST registration is required, right, in each state. Inward supplies concept, is it purchase or sale? Inward supplies means it is always procurement. It is always purchases. So therefore, if I'm purchasing from someone, if that particular transaction is subject to reverse charge mechanism, he will not collect the GST from me. I will collect. Okay. He will not collect the GST from me. I will pay the GST to the government directly. Okay. I will pay the GST to the government directly. I hope, Priya, your query with regard to the inward supply is clear. Now, moving back. So Section 7 again of the IGST Act covers the interstate supply. Subject to the provisions of Section 10. I will tell you what provision of Section 10 is, but first let us understand. Subject to the provisions of Section 10. Supply of goods. Again, I'm telling you, this Section 7 is the IGST Act 2017. For people who are listening for the first time, in our syllabus, we have mainly the CGST Act 2017. That is a Central Goods and Services Tax, but with the provisions relating to interstate supply. We have the IGST Act 2017, which covers. So therefore, subject to the provisions of Section 10, supply of goods where the location of supplier and the place of supply are in two different states, two different union territories, or a state and a union territory shall be treated as a supply of goods in the course of interstate trade or commerce. So therefore, when the location of the supplier, as I told you in the previous slide itself, location of the supplier and the place of supply, if it is in two different states or in two different union territories or in one state and one union territory, then it shall be the supply of goods in the course of interstate trade or commerce. 7 subsection 1 covers only interstate supply of goods only, not services. Please understand that it is only goods, not the services. So two different states, two different union territories, or one state and one union territory is what we have to cover. It shall be treated as a supply of goods in the course of interstate trade or commerce, right? Next. So here when I said subject to provisions of Section 10, Section 10 covers your place of supply provisions. So therefore, in that Section 10, the place of supply is clearly mentioned. In certain cases, in certain supplies, what is supposed to be treated as the place of supply is clearly mentioned. So therefore, in that, whatever is mentioned, subject to that. So that we have to take into consideration when you are determining whether it is an interstate supply or an intrastate supply, right? So that is your first section. Then 7 subsection 2 of the IGST Act covers your import transaction, the supply of goods imported into the territory of India. So whatever supply imported into the territory of India till they cross the customs frontiers of India shall be treated to be a supply of goods in the course of interstate trade or commerce, right? So whatever you are importing into the Indian territory till they cross the customs frontiers will be supply of goods in the course of interstate trade or commerce. So that was your 7 subsection 2. 7 subsection 1 and 7 subsection 2 of the IGST Act covers the supply of goods in interstate trade or commerce. So therefore, now 7 subsection 3 covers the provision with regard to supply of services. With regard to supply of services, again, how do you determine whether it is in the course of interstate trade or commerce? Subject to the provisions of Section 12, the supply of services where the location of the supplier and the place of supply, again same thing here, location of the supplier and the place of supply are in two different states, are in two different union territories, or in one state and one union territory, shall be treated as a supply of services in the course of interstate trade or commerce, right? So that is your 7 subsection 3, very similar to 7 subsection 1, right? Now, similarly, 7 subsection 4 covers the import of services. Supply of services imported into the territory of India shall be treated as the supply of services in the course of interstate trade or commerce. Fine. And apart from this regular supply of goods and services, there is also the concept of special economic zone, which is covered here. When I say special economic zone, within the country, there are demarcated zones. This is for encouraging the foreign investment. there are demarcated special economic zones where the services are provided. That wherever you're providing services to that special economic zone, it is considered as an export. If you're procuring the services from the special economic zone, it is considered as an import. So a supply of goods or services or both, where supplier is in India and the place is outside India, right? Supplier is located in India and the place of supply is in outside India, to or by a special economic zone developer or a special economic zone event, or in the taxable territory not being an intrastate supply and not covered anywhere in this section, shall be again treated as a supply of goods or services or both in the course of interstate trade or commerce. So therefore, this 7 subsection 5 is like a residual section, is like a section which covers the balance part of the provisions. So here what is happening? Supplier is in India, place of supply outside India, interstate trade or commerce. Or special economic zone developer is there. You are providing services to him, or you are procuring the services or goods from him. That is number one. Third one, in taxable territory, supply of goods in the taxable territory, but it is not an intrastate supply. You are clear it is not an intrastate supply. It is not covered anywhere. All this shall be interstate trade or commerce. That is your 7 subsection 4 and 7 subsection 5. So therefore, if you analyze these sections, the two terms, as I told you, very important. Two terms, as I told you, is very important. The location of supplier of goods and place of supply. As we let us have a small recap here. 7 subsection 1 and 7 subsection 2 of the IGST Act deals with supply of goods in the course of interstate trade or commerce. Right? Two terms, as I told you, very important. Location of the supplier of the goods and place of supply. Location of supplier of the goods again is not defined in the Act. We have to see what is the facts and circumstances of the case. Place of supply, you cannot give a common sense understanding. You have to refer to the provisions of section 10 and section 13 of the IGST Act to understand what exactly is the place of supply. Right? So that is your 7.1 and 7.2. Then moving forward, supplies outside India. Supplies outside India here is in the course of interstate trade or commerce, the supply of goods imported into the territory of India till they cross the customs frontiers shall be considered as a supply of goods in the course of interstate trade or commerce. Import of goods means you are bringing the goods into India from a place outside India. That is your import of goods. I hope this point is also very clear. Supplies outside India and import of goods. Now, 7 subsection 3 and 7 subsection 4, again, as I mentioned earlier, it is your supply of services in the course of interstate trade or commerce. Two categories of supplies are covered here. Supplies within India, wherein the location of supplier is in one state, place of supply is in the other state. It is an interstate supply. Right? Location of supplier of services is given in 2 subsection 71. Please remember, supplier of goods is not defined, but supplier of services is defined. So 2 subsection 71 gives this particular definition, where a supply is made from a place of business for which registration has been obtained, the location of such place of business. Number 1. Okay, you are making a supply from a place of business for which registration has been obtained. That particular location is to be the location of supply. Second one, where a supply is made from a place other than the place of business for which the registration is obtained. That means a fixed establishment somewhere else. The location of such fixed establishment. More than one establishment you are making the service, whichever is directly concerned with the provision of supply. So if I have a branch office, if I have 3 branches within one state, I have a GST registration in one branch, in one head office. The other 2 branches, I'm sitting there and providing the service. So therefore, that establishment is directly connected to the provision of supply. So therefore, in that particular situation also, where whichever is the exact location, that is considered to be the place of supply, and where no such information is available, and in the absence of such places, the usual place of residence of the supplier is to be considered as the location of supplier of service. Then we also looked at the import of services. The supply of services which are imported into the Indian territory shall be treated as the supply of services in the course of interstate trade or commerce. 2 subsection 11 of the IGST defines the term import of services as supply of any service where supplier is outside India, recipient in India, and the place of supply of services in India. So these are the 3 conditions to be fulfilled with regard to the understanding the term import of service. Right. 7 subsection 5, as I told you, supply of goods or services in the course of interstate trade or commerce. Again, in this case, supplier is located in India, place of supply is outside India. Again, here this also is in the course of interstate trade or commerce. In this particular situation, location of recipient is not very important. Again, some more for export of goods or services, some other conditions have to also to be fulfilled. Right. Again, as I told you, special economic zone, if you are supplying the goods or services to a special economic zone, or you are procuring the goods or services from a special economic zone, in that particular situation also you have to understand that it is in the course of interstate trade or commerce. What is a special economic zone? Geographically bound zone within the country where economic laws relating to export or import are more liberal as compared to the other parts of the country. So for all the tax purposes, an SEZ is always considered to be a place outside India. So whichever you are making supplies to SEZ, or if you're procuring services to SEZ, it is to be treated as interstate supplies. Again, days of supply is not relevant here in case of supplies to SEZ unit or developer. It does not matter which state the SEZ is there. Whichever state it is located, even though if it is located in the same state as the supplier, it is considered to be a supply in the course of interstate trade or commerce. Right. Again, 7 subsection 5, any other cases where any goods or services not being an intrastate supply, not covered elsewhere, also is an interstate supply. Again, this is a residuary clause and will cover all supplies other than those not covered under any other provisions. Right. So that was your section 7 in detail with regard to interstate supply. Fine. Let us now see if there are any queries. Yes, Namita, welcome to the class. I was wondering where your queries are. Finally, I could start seeing them. Good. Sir, if Mr. A has different branches, the furniture business in UP, can he obtain different GST number for each branch on voluntary basis? I already clarified this. Within the state, if he has different branches, he definitely can obtain different GST registration. It is not compulsory. It is up to him. It is voluntary. Right. 7 subsection 2. It will be considered import only after it crosses the customs frontier. Let us look at the section so that we understand exactly what is it. Supply of goods imported into the territory till they cross the customs frontiers. So till they cross the customs frontiers means what? You are imported the goods from coming from abroad, port or the respective port where it lands and it is cleared for home consumption. That is the place which is actually technically known as the customs frontiers, right? Clearly, these all definitions will be important in customs more than the GST. Sir, please explain second. Which second, Namita? Please tell me what exactly is to be explained so that I look into it. Yeah, tell me which exactly it is section is supposed to be covered so that I can explain you. It is just mentioned, sir, please explain second. Okay, so tell me what is the exact query which you have, which shall be my pleasure to assist you with the same. Now we come to section 8, intrastate supply. Now section 8, intrastate supply. Subject to the provisions of section 10, which is again section 10 of the IGST Act, which deals with the IGST Act, which deals with the place of supply. Subject to the provisions, supply of the goods where location of supplier and the place of supply are in the same state or same union territory shall be treated as the intrastate supply, provided that the following shall not be treated as the intrastate supply. What all? Supply of goods to or from a special economic zone developer or a special economic zone unit. It is not at all an intrastate supply, even if the special economic zone is located within the same state. Still, you are not supposed to take it as an intrastate supply. Then goods imported into the territory of India till they cross the customs frontiers of India. the goods which are imported into the territory of India till they cross the customs frontiers, again, that also is not a intrastate supply. Supplies made to a tourist referred to in section 15. So if a tourist comes and purchases something from any state, it is not an intrastate supply. There is a separate section which deals with that, supplies to the tourist, that is section 15. Right. So that is your 8 subsection 1. Again, 8 subsection 2, subject to the provisions of section 12, supply of services, where the location of supplier and the place of supply of services are in the same state, shall be treated as an intrastate supply. This deals with services, provided that intrastate supply of services shall not include the supply of services to or by a special economic zone developer or a special economic zone unit. So therefore, in this particular situation, intrastate supply of services does not cover the supply of services to or from a special economic zone unit. Moving forward, again, the same thing what is there in section 7 in here, where establishment in India, where a person has an establishment in India and other establishment outside India, establishment in one state, another establishment outside the other state, right? And establishment in one state, other establishment being a business vertical. When I say business vertical, within one state, if 2 businesses are there and both the businesses have a GST registration, that means it is a business vertical. So they shall be treated as establishments of distinct persons. So this distinct persons concept only is of special relevance, what we covered in schedule 1 when what we discussed in the previous class, right? Then explanation 2, a person carrying on a business through branch or an agency shall be treated as having an establishment in that territory. So if a person has a branch, if he has an agency in that particular person, it shall be treated as having an establishment in that territory. So supply of goods or services, 8.1 and 8.2 of the IGST, where the location of supplier and the place of supplier in the same state or same union territory, intrastate supply, chargeable to CGST and SGST. Exclude provision to section 8.1 and 8.2, supply of goods or services by SEZ or SEZ developer, supply of the goods to or by SEZ developer, to or by SEZ developer or unit, it is not to be treated as a intrastate supply. Again, when I said tourist also is not an intrastate supply. Who is a tourist? Section 15 explanation is inserted, which says that tourist is a person who is not normally resident in India, who enters India for a stay of not more than 6 months for legitimate non-immigrant purposes. So therefore, a stay of not more than 6 months. If a person comes, he's staying in India, a person comes from outside the country, he's staying in the country for not more than 6 months for legitimate non-immigrant purposes. That means he does not intend to carry on a business or study or something here. He comes only for the purpose of recreation or vacation, right? That is the explanation to section 15, which covers the difference. And of course, goods imported into India also is not an intrastate supply. So distinct person, as I told you, we saw this phrase, we saw this concept in detail in schedule 1 to section 7 of the CGST Act. Again, establishments which is within one state, another establishment, 2 different states, or business vertical, 2 different registrations of the same business of 2 different businesses in one state is known as the distinct person. Right now, there is an interesting scenario for which clarification was also given by the government. Now, what is happening is there is a hotel service. What the hotel service does is there is a company which is located in a special economic zone. In special economic zone, that particular company is located. That company wants to do a training session for all its employees in a hotel which is located in the domestic territory in the same state. Let us take an example here. Now, in Hyderabad, Telangana, there is a special economic zone where the company called Wells Fargo is situated. Now, there is a hotel which is known as Park Hyatt, and in Park Hyatt, this Wells Fargo wants to train its employees, more than 100 employees. So therefore, the contract is between the special economic zone, that is Wells Fargo, as well as the hotel Park Hyatt. In this situation, what happens? Whether it is an IGST interstate supply or whether it is an intrastate supply. For this, I just have to take a small deviation to section 12 subsection 3 clause C of the IGST Act, which you will cover in great detail when you study the concept of place of supply. This particular section 12 subsection 3 clause C, what does it say? It says that where any services by way of any accommodation or by way of any conference or by way of any banquet is provided, the place of supply shall be the location where the immovable property is located. Fine. So therefore, the place of supply is clearly specified in section 12 in these transactions. So wherever your immovable property is located, so therefore Park Hyatt is located in Hyderabad, Telangana. So you are providing the services in Hyderabad, Telangana. So you are providing it to a special economic zone. The contract is between Park Hyatt and Wells Fargo, which is situated in the special economic zone. But 12 subsection 3 clause C says that wherever such services are provided, the place of supply shall be the location where such immovable property is located. So what are the two determinants here? Number one, location of supplier of service. Number one, location of supplier of service. Number two, place of supply. Location of supplier, very clear. Supplier of service is Park Hyatt, located in Hyderabad. That is the location of supplier of service. Place of supply, 12 subsection 3 clause C says that the location where the immovable property is located is to be considered. So therefore, in this particular situation, the location of supplier of service and the place of supply are in one state only, and therefore it is not a supply in the course of interstate trade or commerce. So therefore, this clarification is given. You can definitely expect a question on this. So therefore, location of supplier, place of supply, it is in one state. It is to be treated as an intrastate supply. So this is an interesting situation with regard to which the government wanted to give some clarification, wherein the nature of banquet, conferencing or accommodation transaction between the hotel and the special economic zone. Before we go to section 9, let me see if there are any queries. In aggregate turnover, exempt supplies are to be included. Yes, it has to be included. Taxable supplies and exempt supplies are clearly given. So concept of when you're calculating the aggregate turnover for the purpose of registration under GST or for the purpose of applying for the composition levy, as we will see in section 10 in today's session, we have to take the exempt supplies as well. So does it mean import or interstate supply under GST? Very much. Import means it is an interstate supply only. It is not an intrastate supply. Sir, as cess is treated outside India. So if any person living in cess come to other place, that means see, cess is not treated as outside India. It is located within India only for tax purposes. Only for tax purposes, it is to treated as a foreign country, only for tax purposes. That is because the moment it is treated as a foreign company, there were more people will start investing in such SEZ and setting up their offices there. That is the main important situation why SEZ are there. So if you are providing the services or goods to the SEZ, you need not collect any GST on that. The SEZ will not pay any GST on that. That is the incentive which is given for the foreign companies to set up the office. Under explanation point, the establishment within same state are not registered. It won't be considered as a distinct. Let us go to the explanation once more to clearly understand. What does the explanation point 3 says? Establishment in a state and any other establishment being a business vertical registered within that same state or territory. So he clearly says that establishment should be in a state and it has to be registered also. So therefore, clearly you can say that yes, it has to be registered. So if not registered, it won't be considered as distinct. So therefore, if it is registered, it is distinct. If it is not registered within the state, it is not considered as distinct. Who will pay the tax in this situation? The cess unit or the hotels? The hotels will charge CGST and SGST from the special economic zone. Hotels will charge because it is an intrastate supply, it will charge the CGST and SGST from the special economic zone. Because it is not a supply in the course of interstate trade or commerce, hotel will collect from the SEZ and pay it to the department. Import will attract customs and GST both. Yes, I'll tell you the logic. On import of goods, what were the taxes which are levied? earlier, prior to GST. Prior to GST, customs was levied. Okay, prior to GST, customs was levied. Customs was levied on the imports. Then there was something called as a countervailing duty. When I say countervailing duty, if the same imported product was manufactured here, the same imported product, instead of importing from outside the country, you manufacture in this country, the businessman would have had to pay excise duty. So since you're not manufacturing here and you're importing from outside the country, this countervailing duty and another duty called additional excise duty was levied on the import of goods. So prior to GST, import of goods were subject to customs duty, it was subject to countervailing duty, and it was subject to additional excise duty. Now what has happened? After GST has come, instead of countervailing duty, instead of additional excise duty, IGST is applicable. And customs duty, which was there earlier, continues to be there now also. So customs duty continues to be there, but this additional excise duty and countervailing duty are now not there, and IGST has replaced them. Janki, I hope you got the clarification to your question. Sir, if a person living in SEZ come to other place, person living in SEZ who's operating a business within the SEZ, if he's shifting his business to some other place, is that your doubt? If he's shifting his business to some other place, then straight away he comes in the domestic territory and no longer benefits can be given. Special economic zone means nothing very different. It is in the city only, but you'll see all the technology parks and all which are instituted where all the foreign companies come and set up their office. That is your special economic zone, right? So it is not like it is something that is outside the country or something on those lines, right? I hope you understood the question. Now we come to section 9. Section 9 of the IGST Act, supplies in territorial waters. Now what happens where the location of the supplier is in the territorial waters? Okay, notwithstanding anything contained in the Act, where the location of the supplier is in the territorial waters. That means in the waters in the ship some service is being provided. When the ship is going, some product is being sold on the ship. The location of the supplier, or where the place of supply is in the territorial waters, the place of supply shall be, for the purposes of the Act, be deemed to be in the coastal state or union territory where the nearest point of the appropriate baseline is located. So what does it mean? So therefore, wherever the supply is happening in the territorial waters, location of supplier is there in the territorial waters. Place of supply also is there in the territorial waters. So how do you determine which state it comes into? We say the place of supply for the purposes shall be the coastal state, right? Or union territory, wherever that ship is there, nearest baseline where it is located, that particular state or union territory shall be considered to be as the place of supply. So that is a point with regard to territorial waters. So where the location of supply or where the place of supply, where such location is in territorial waters, this section determines. Territorial waters means it is a belt of coastal waters extending at most 12 nautical miles from the baseline of a coastal state. So therefore, from the this nautical mile concept also you will see in customs. So within the baseline, up to 12 nautical miles of the sea waters is your Indian territorial water. So this section 9 will kick in only when that particular supply happens within 12 nautical miles from the baseline. If it happens beyond 12 nautical miles, it is not at all a supply for us, right? So for this, how to determine the place of supply? If it is in the territorial waters, that is within 12 nautical miles from the baseline of the state. Where the location of the supplier is in the territorial waters, it shall be deemed that location of such supplier is in the coastal state or union territory where the nearest point of the appropriate baseline is located. So location of supplier is in territorial waters. Whichever location, nearest point of the baseline you have to take, that is the respective location of the supplier. Right. So therefore, that was your section 7 and section 8 of your IGST Act. Now we come to, please remember, please be very careful, section 9 of CGST Act. Same provisions are there in section 5 of the IGST Act. We shall look at the chargeability section, what is given in section 9. Before that, any queries? If a person, Mr. Chetan, If a person has two business in two different states, but the business in one exceeds 20 lakh, but other not exceed 20 lakhs, whether he is required to get registration for two different states. See, first of all, the doubt what you are asking falls in the chapter which is called registration. Registration chapter will cover this question. So therefore, now if I clear this question, I can clear it. There is no problem. But the only issue is some states it is 20 lakhs, some states it is 40 lakhs. So therefore, which state you are talking about also is an important point to consider. But assuming the threshold limit is 20 lakhs in your doubt, in one state, if it exceeds 20 lakhs and other it does not exceed 20 lakhs, still the registration is to be taken in both the states, because the limit of turnover is to be considered PAN wise and not GST wise. So if one person, you are into two different states, 3-4 different states, in one state he has less than 20 lakhs, other state he has more than 20 lakhs, he has to get himself registered in all the states. That is the answer to your question. Any further queries here? Mr. A living in SEZ goes on vacation to other place in the same state. Will all the purchases he made comes under? No, it will not. Because a person living in special economic zone cannot be considered as a person who is staying outside India. That is number one. Only with regard to the business. Only with regard to the business. If the business is set up in that particular special economic zone, multiple conditions have to be met. It is not very easy. You have to get a registration clearly stating that a foreign person is invested in that business. Only then it can be set up. So in your question, it will definitely not come in a tourist concept. Yeah. Now we come to section 9. That is the chargeability section of GST. Yeah. Section 9. So therefore, what does section 9 say? Section 9 subsection 1 and section 5, it contains the same provisions. Subject to the provisions of subsection 2, there shall be levied a tax known as the Central Goods and Services Tax. Subject to the provisions of subsection 2, there shall be levied a tax known as the Central Goods and Service Tax. So what is subsection 2? We shall go there. There shall be levied a tax called the Central Goods and Service Tax on all intrastate supplies of goods or services or both. On all intrastate supplies. Since this is a CGST Act, it says only intrastate supplies. Same section 5 in IGST Act mentions interstate supplies. So therefore, there shall be levied a tax called the Central Goods and Services Tax on all intrastate supplies of goods or services or both, except on the supply of alcoholic liquor for human consumption on the value determined under section 15, which talks about the provisions of relating to value of supply, and at such rates not exceeding 20% as may be notified by the government on the recommendations of the council and collected in such manner as may be prescribed and shall be paid by the taxable person. Right? That is the concept. So therefore, it says that there shall be levied a tax, which is the CGST, on all goods or services, again intrastate, except on the supply of alcoholic liquor for human consumption, because we read in the first session itself that is excluded right in the constitution. On the value given as per section 15, how to determine the value of supply, you will read section 15 thoroughly in the chapters pertaining to value of supply. At such rates not exceeding 20%. So why is 20% written here? Because wherever we pay, it is all 18%. So when I say 20% here, at rates not exceeding 20%, not exceeding, some cases they are 28%, how it is possible? 20% is only CGST. So not exceeding 20% in CGST Act will be there. SGST Act, which is nothing but the same as CGST Act, will mention another 20%. So therefore, total 40% it cannot exceed. That is the logic. 40% it cannot exceed. Right? not exceeding 20% as may be notified by the government on the recommendations of the council, collected in such manner as may be prescribed and shall be paid by the taxable person. Right? 9 subsection 2. As I told you, subject to the provisions of 9 subsection 2. So 9 subsection 2, what does it say? It mentions about those 5 products. The central tax on supply of petroleum crude, high-speed diesel, motor spirit, which is commonly known as petrol, natural gas and aviation turbine fuel, shall be levied with effect from such date as may be notified by the government on the recommendations of the council. Right? So on all these products, CGST will be levied from the date which the council recommends. 9 subsection 3. This is where the concept of reverse charge mechanism starts. 9 subsection 3, 9 subsection 4, and 9 subsection 5. These 3 are the sections which talk about the reverse charge mechanism. 9 subsection 3 is very clear. It says that the government by notification will specify the categories of goods or services or both the tax on which shall be paid on the reverse charge basis. Okay, and on such all the provisions will apply to the recipient as if he is the person liable to pay the tax. So if the tax does not reach the government will not proceed against the supplier, but it will proceed against the recipient. Right? So therefore, 9 subsection 3, what does it say? On recommendations of the council, it will specify the categories of supply of goods or services, the tax on which it is to be paid on the reverse charge basis. From our examination point of view, the services which are mentioned in the reverse charge mechanism concept are important for us to understand, because multiple problems can be asked on the services aspect. Goods, there are a very less number of goods that are mentioned and not many variations or conditions subject to which reverse charge is applicable. So you need not expect any questions based on reverse charge mechanism for a supply of goods. But for supply of services, 100% you can expect questions pertaining to the reverse charge mechanism. Right? So that is your 9 subsection 3. 9 subsection 4. The government again may on recommendations of the council may specify a class of registered persons who shall in respect of supply of specified categories of goods or services both receive from unregistered supplier pay the tax on reverse charge basis as the recipient of such supply. All the provisions shall apply to such recipient as if he is the person liable to pay the tax in relation to the supply of goods or services. It is important for us to understand the difference between 9 subsection 3 and 9 subsection 4. 9 subsection 3 specifies the supplies. 9 subsection 3 specifies the supplies and says these are the list of goods and services on which reverse charge is applied. But whereas 9 subsection 4, what does it say? It says that if you are a registered person, please listen to me very carefully. If you are a registered person and you are procuring the goods or services from an unregistered person, if you are a registered person and if you are procuring the goods or services from an unregistered person with respect to certain specified categories of goods or services, the person who is registered shall pay the government the tax on the reverse charge mechanism. Right? To recap again, 9 subsection 3, very simple. It specifies the list of goods or services by way of a notification. In that notification, it says on all these goods or services, the GST is applicable on the reverse charge mechanism. But in the second situation, it says that 9 subsection 4 says that with respect to certain specified categories of goods or services, a registered person procures from the unregistered person. Only specified. Again, this is also specified by the government. Registered person procures from unregistered person. The registered person should pay the tax on the reverse charge mechanism. The condition is in 9 subsection 3. Any person who is procuring the service has to pay on the reverse charge mechanism. For that, he has to anyways get registered. But 9 subsection 4 comes. It does not apply to unregistered recipient of supply of services. It applies to a person who is registered, who is procuring the specified supplies from an unregistered recipient. That is your 9 subsection 4. It gets even more interesting in 9 subsection 5. This is where the concept of e-commerce operator comes. E-commerce operator. The government may, on recommendations of the council, by notification, specify categories of services, the tax on intrastate supplies of which shall be paid by the electronic commerce operator if such services are supplied through it. So therefore, what does it say? Based on the council's recommendations, council means GST council, article 279A, what we studied in the first session. They may specify certain specific categories of service, the tax on which has to be paid by the electronic commerce operator if the services are supplied through such app. Again, they are clearly specified. Not everything is covered. It is clearly specified. And the provisions of the act shall apply to the electronic commerce operator as if he is the supplier liable for paying the tax. As if he is the supplier, it shall be applicable to him. And if he does not pay the tax, they will proceed only against the electronic commerce operator, not against the supplier of service. Provided where the electronic commerce operator does not have a physical presence in the taxable territory, any person representing such electronic commerce operator shall be liable to pay the tax. Physical presence is not there. Therefore, any person representing such electronic commerce operator shall be liable to pay the tax. This is your 9 subsection 5. Where he does not have physical presence, where he does not also have a representative, then it is important that such electronic commerce operator appoints someone in the taxable territory for the purpose of paying the tax, and such person shall be liable to pay the tax. That is your 9 subsection 5. Right? Before we go to the discussion on 9.3, 9.4 and 9.5, let me see if there are any queries. If goods imported till it crosses customs, it is interstate. After crossing, if the goods are subsequently sold, then it depends whether it is intrastate or interstate. Okay. If goods, question by Janki, if goods imported in India till it cross customs frontier, it is interstate. After crossing customs frontier, it becomes a local product. And then it differs. For example, in Vizag, Andhra Pradesh, the goods come. It crosses the customs frontier. From Vizag, it is sold to Vijayawada, which is also in Andhra Pradesh. It is an intrastate supply because it has already crossed the customs frontier. It is sold to, say, Nagpur in Maharashtra. Again, interstate supply. I hope the concept is clear. Sir, as supply to tourist is not treated as intrastate supply, will it be treated as interstate supply and residuary clause? It has a section separately which is given, that is section 15. It clearly says supplies to the tourist. So therefore, it will be covered in section 15 of the IGST Act. Next question by Mr. Naveen. Sir, let us say both supplier and recipient are registered. The notified supplier under 9 subsection 3. Very interesting question. Who is liable to pay the tax? Is it under reverse charge or forward charge? Reverse charge, each service has a different analysis to it as to when reverse charge will be applicable. But to give you an answer to the question, if the service are covered under reverse charge mechanism, both supplier and recipient are registered, supplier should not pay, only recipient has to pay the tax. Only recipient has to pay the tax. This point has come across to us in a lot of GST audits and a lot of internal audits. For example, security services is one of the services which comes under the reverse charge mechanism. That is provision of manpower, provision of security agencies. It was later introduced in GST. So all security agencies are registered under GST. So therefore, they are charging GST from their respective customer. In that particular situation, our advice was that they should not pay the GST directly to the securities person because it specifically comes under the reverse charge mechanism. They have to pay the tax directly to the government because it is clearly covered in the reverse charge mechanism. I hope, Naveen, your question is clear. Very, very interesting question. I'm sure this question also must have come to you in course of an audit when you're doing your articles. It definitely appeared like that because we also had similar issues with regard to the same. Yeah. Now, let us come back to our discussion. Yeah, some important points here now. CGST levied on all intrastate supplies of goods or services. Tax collected in such manner as may be prescribed shall be paid by the taxable person. Alcoholic liquor outside the purview of GST. What are the rates of GST? 0%. Also, that is nil rated goods, 0.125% with regard to, I think, precious stones, it is 0.125%, 1.5% for gold jewelry, 2.5%. Again, when I say 1.5%, CGST is 1.5, SGST 1.5, total is 3%. 2.5, when I say it is 2.5 CGST, 2.5 SGST, 5%. 5% your restaurant services, 6% means 6 CGST, 6 SGST is 12%, 9, 9, 18. Most of them are under 18% slab. 14% is also applicable in case of cars and air conditioners. Maximum rate of CGST can be 20%. So therefore, on each product, the maximum tax which can be charged is 40%. 20% CGST, 20% SGST. Goods imported into India. All imports are deemed as interstate supplies. Accordingly, IGST shall be levied on imported goods in addition to the applicable customs duties. Right? So IGST and customs duty both will be levied in case of imports. So therefore, as I told you, 9 subsection 3 and 9 subsection 4, reverse charge mechanism will be applicable. Supply of such goods or services as notified by the government on recommendations of the council. Second, supply of specified categories by unregistered supplier to specified class of registered persons, which are notified. On these two aspects, reverse charge will be applicable. All the provisions will apply to the recipient in such cases as if he is the person liable to pay the tax in relation to the supply of the goods or services or both. Now, scenario 1. Main categories of goods or services which are covered by 9 subsection 3. What are the goods which are covered in 9 subsection 3? Cashew nuts, BD wrapper leaves, tobacco leaves, raw cotton, supply of lottery. So these are all the goods which are covered, not very relevant from exam point of view, but please remember, because a surprise if a question is asked, you should be remembered that is all under reverse charge mechanism. So these are all covered under reverse charge mechanism, supply of goods. Whereas again, what are the goods which are there? Silk yarn, used vehicles, seized and confiscated goods, right? All these tax under old and used goods which are there, waste and scrap when supplied by the central government, union territory, local authority, etc., are taxable under reverse charge mechanism. Right? Now, we come to the services which are notified under 9 subsection 3. Very, very important from your examination point of view. Any further queries before we start this? Yes, you face this issue in the article. Very good. Good, interesting. That is the usefulness and the beauty of practical training, because you face such issues, and the same issue if you read in your exam, you get some sort of a thrill that you have already encountered this issue when you have done your articles and you have faced this issue in an audit, right? So now, the first type of service which is given in 9 subsection 3 notification is, this is basically notification 13/2017, which is dated 28th June. 28th June was this particular notification which came. So therefore, in this, the various aspects are given. So therefore, supply of services by a goods transport agency in case of transportation of goods by road. So first of all, goods transport agency is the service provider. Recipient of service is what is mentioned in this particular column. It can be a factory registered or a society registered, cooperative society, any person registered under CGST, IGST Act, body corporate, partnership firm, casual taxable person. What is casual taxable person? This we will cover in the registration chapter. Casual taxable person means for a temporary basis, if he is going to another state for selling his products, he has to take a GST registration in that state, which should be valid only for a limited period. An example is, if you are a jeweler, you are going outside the city where a jewelry exhibition is conducted. So you want to participate in that exhibition, but you don't have a permanent business in that other state. So rather than taking a permanent GST registration, the government gives you a facility where you can take a temporary GST registration in the nature of a casual taxable person. So therefore, if a recipient of service is that, supplier is a goods transport agency. Again, in respect of transportation of goods by road, This is transportation of goods by road only. Goods Transport Agency takes the responsibility of transportation of the services by good and also issues a consignment note. So if a person is supposed to be treated as a goods transport agency, that means he has to issue the consignment note and he has to take the responsibility of the goods right from the origin to the destination. There is a difference between a goods transport agency and hiring of a motor vehicle. If one person has a motor vehicle, I'm just taking that motor vehicle on hire for the purpose of transport. That is not a goods transport agency because I'm just using the means of transport for transporting the goods. When I say good transport agency, I take up the end-to-end responsibility of transferring the goods from one state to the other. End-to-end responsibility of transferring the goods from one state to the other. So that is basically supply of services by good transport agency. Again, the supplier of service should be a goods transport agency who has not paid the CGST of 6%. What does this mean? When it comes to a goods transport agency, it has two options. Either it can collect the taxes at the rate of 12% or it can opt for the reverse charge mechanism. So therefore, if a goods transport agency is got itself registered and it is collecting tax at the rate of 12%, then this one will not be subject to reverse charge in such cases. So only if it does not collect, it does not opt for the 12% scheme, but he opts for the reverse charge 5% scheme, then on this reverse charge mechanism will be applicable. So therefore, GTA services, that is goods transport agency services, two following tax rates are applicable. First one, 5%, provided the GTA has not taken the input tax credit. This 5% is applicable to goods transport agency, but it cannot take the input tax credit of its inputs or the input services used in the course of providing the GTA service. In case of second one, it is 12%, where the GTA opts to pay the GST at the said rate. In that case, there is no restriction of availing the input tax credit. So wherever this 12% is applicable, their reverse charge mechanism is not applicable. Wherever 5% is applicable, in this particular situation, the respective reverse charge mechanism will be applicable. So, however, some exemptions are given. That is, the reverse charge mechanism shall not apply to the services provided by the GTA by way of transport of goods by road to department, establishment of central government, state government, union territory, or local authority or government agencies which has taken registration under CGST only for the purpose of deducting tax under Section 51 and not for making a taxable supply of goods or services. So another new section is introduced when we are discussing the provisions, which is Section 51. So let me make you understand what is Section 51 here. Please bear in mind that in case of a government or state government, Section 51 of the CGST Act, what does it say? If a government or a state government or a union territory or local authority, an agency of the government enters into a contract with a third party, and which is more than 2,50,000 as per the contract or the agreement. If it is more than 2,50,000 as per the contract or the agreement, 1% TDS is supposed to be done. So therefore, for doing this TDS, tax deducted at source, which you will read in Section 51 when it is covered in the syllabus, for this a separate registration apart from the GST registration is required. A separate registration apart from the regular GST registration is required only for the purpose of deducting the tax at source. So therefore, in this particular situation, as where a separate registration is required and where the government or local authority is taking registration only for that purpose, then and the goods transport agency is providing services to them, reverse charge mechanism will not be applicable. That is an exception given to this particular section. Now, the second service which are given in the goods transport agency are advocates. The kind of unity which advocates have is surely lacking in our profession. The reason is right from the time when service tax was supposed to be imposed, because legal service also is a service. But the lawyers lobby, the lawyers associations, the bar associations made sure that they were not impacted by service tax at all. So right from service tax also there was the concept of reverse charge. In fact, the services what has been covered in this GST reverse charge notification by virtue of 9 subsection 3 is very similar to the reverse charge provisions which existed when service tax was there. So there also the advocates were outside the service tax net. They said nothing doing, we are not going to pay, but only the service recipient will be. If someone is providing this, we are providing services to someone, we will not collect any service tax and pay. We cannot take that responsibility. You collect it directly from the customer. So that is why lawyers from day one were covered under reverse charge mechanism only. So therefore, in this case, the services provided by an individual advocate, including a senior advocate or a firm of advocate, by way of legal services, directly or indirectly. So therefore, it can be a direct service or indirect service. Individual advocate, including senior advocate or a firm also. Supplier of services, individual advocate or a senior advocate. Recipient of service is a business entity, any business entity located in the taxable territory. In this case, reverse charge is applicable. Third one, the services supplied by an arbitral tribunal to a business entity. When I say arbitral tribunal, it means a court which is instituted for the purpose of settling the disputes between two parties in any business, two or more parties in any business entity. So where the supplier of service is the arbitral tribunal, which is again a legally constituted quasi-judicial authority, the recipient of service is any business entity, reverse charge mechanism is applicable. And the fourth one, services provided by way of sponsorship to any body, corporate or partnership firm. This is a very, very important from exam point of view. So if you are doing a sponsorship service, when I say sponsorship service, I give the particular amount to the person who is asking for the sponsor. So I am paying him that respective amount. And he is providing the service to me for by way of branding, etc. So in this particular situation, supplier of service can be any person, whereas recipient of service is body, corporate or a partnership firm located in the taxable territory. So again, this reverse charge mechanism is applicable only when the sponsorship service is provided by any person to a body, corporate or partnership firm. For supplier of service should be a person, recipient of service should be body, corporate or partnership firm, not anyone else. Only then it will be applicable. So that is the fourth question. Then fifth one, services supplied by the central government, state government, union territory, local authority, etc., excluding renting of movable property and specified services like postal services, etc., and transport of goods or passengers, where the supplier of services central government, state government, union territory or local authority. So please bear in mind here, renting service is there, transport of goods, passengers there, supplier of services central government, state government, union territory, local authority. Recipient of services, business entity. Business entity is there. On government premises is there. It is empty. Government giving on rent to the respective person. This person, the tenant, has to pay the GST on the reverse charge basis. So that is these type of services which are provided by the central government, state government, union territory or local authority, etc., is also subject to the reverse charge mechanism. And then the services supplied by a central government, state government, union territory by way of renting of immovable property to a person registered under CGST Act 2017. So therefore, in this particular situation, the central government, state government, etc., they provide renting of immovable property service to a person who is registered under CGST Act. In that particular situation, a person who is registered under CGST Act has to pay the GST on the reverse charge mechanism. Then another interesting point is services supplied by a person by way of transfer of development rights or floor space index for construction of a project by a promoter. Now, what is this? Now, promoter here in this particular serial number 5B refers to a developer. Now, there is a person who owns some land. Developer goes there, makes say 5 to 6 flats in that land and retains few for himself and gives the balance to the landlord. So here what is happening? The landlord, okay, the landlord is supplying the development rights. Landlord is supplying the development rights to the builder, or in this case, the promoter. In that particular situation, it is the responsibility of the recipient of service, that is the promoter, to value the development rights. Development rights value the development rights, and on that pay the tax on the reverse charge mechanism. I hope this point you understood. This is an interesting point. Real estate sector in GST has so many changes right from the time it has come. It was not, this particular 5B was not there earlier. It came just 2 years back because a lot of controversies with regard to real estate. People did not understand how to calculate the tax and how to pay the GST, etc. That is why it clearly said, because a landlord is just having property, he need not be registered under GST. So therefore, that is why the obligation is now shifted to the promoter to pay the tax on the reverse charge mechanism. Then 5C is long-term lease of land, that is 30 years or more by a person against consideration in the form of upfront amount called as premium, development charges, etc., or periodic rent for construction of a project. So if you are giving a land on the long-term lease and you are taking some consideration before, here also the supplier of service can be any person. Recipient is the promoter who has taken the land on long-term lease. This also is subject to the reverse charge mechanism, right? Then sixth, very, very interesting point, very, very important from the exam point of view also. A service is supplied by a director of a company or a body corporate to the said company or the body corporate. So therefore, a director of a company is there. Director of a company is there. He is providing the services to the body corporate or company. Supplier is the director of the company or the body corporate. Recipient is either the company or the body corporate located in the taxable territory. Reverse charge mechanism, company has to pay. Lot of variations happened in this, we shall discuss shortly. Supplies services by insurance agent to any person carrying on the insurance business. Every insurance company, will have a lot of insurance agent. This insurance agent, if he closes some insurance policies, he will get some commission. In this particular situation, he may not get himself registered under GST, but the life insurance company or any particular insurance corporation will pay the tax on the reverse charge basis. Similarly, recovery agent. Banking institution, one has given a loan to someone, that person is not paying on time. So the banking institution appointed a recovery agent for recovering the respective amount. This also, the bank shall pay the tax on the amount whatever is paid to him on reverse charge basis, right? Then supply of services by music composer, photographer, artist, or the like, by way of transfer or permitting the use or enjoyment of a copyright relating to original dramatic, musical or artistic works to a new music company, producer or the like. So if a music composer is there, if a photographer is there, he is providing the services. He is providing the services to the music company for using his song, etc. Recipient of service, music company, producer located in the taxable territory shall pay the GST on the reverse charge basis. Similarly, the supply of services of author, a book author, he is permitting the use to the publisher for printing his books, originally literal works of the publisher. Supplier of service is author, recipient is publisher, recipient shall pay the tax on the reverse charge basis. However, the option also is given to the author in this particular case to pay the tax under the forward charge by filing a declaration in the prescribed form. It cannot be withdrawn within 1 year of filing the declaration. So therefore, if he wants to withdraw and again come back to reverse charge, you have to do it only more than 1 year. Right. So therefore, let us just stop here. Let me see some queries, then we shall continue. There are two more services, a few more services which are covered under the reverse charge mechanism. Then based on that, we'll work out some problems and then we'll go to section 10, which is the composition levy. Meanwhile, let me see if any issues there. Transport companies like Kranti Transport, Navata Transport can be considered as GTA. Yes, very much it is a GTA because they take end-to-end responsibility of transporting the goods and issue a consignment note. For a goods transport agency, the main feature is issuance of a consignment note. Then the advocates are eligible. Sir, why GTA service is in reverse charge? What is the reason? The main reason is for transport companies, they are mostly very not regulated properly because any person who is having 5 to 6 vehicles can become a transport company. And to run a transport company is very, very difficult because you need to take care of end-to-end responsibility. You need trustworthy people for driving the vehicles, for supplying the goods, etc. So therefore, still, if you see, it is under the unorganized sector only. as compared to the other sectors. So therefore, that is the reason why the government, even in service tax, kept the GTA under the reverse charge basis, and also in GST continue to do the same. Then advocate are eligible to take ITC on the reverse charge taxes? No. See, advocate will provide the service. The tax will be paid. So, for example, my company case is to be fought by the lawyer. Lawyer charges a fees of 2 lakh rupees. 18% I have to pay. Me, the client, 18% of 2 lakhs, 36,000. I have to pay directly to the government. Yes, I will get the input tax credit of that also. Input tax credit chapter, you will see the taxes on which input tax credit. In fact, I'm only going to cover input tax only. So be rest assured, during those chapters, I will clearly know, you'll clearly be able to identify that on reverse charge basis, whatever tax is to be paid can be claimed. The input tax credit can be claimed. If individual obtains advocate service, will forward charge apply? No, it will cover under the exemptions list. Exemptions topic we will cover on Tuesday. There, if you see in the exemptions list, that will be there. So therefore, forward charge will not come. If advocate is there, there is no question of GST forward charge. That is an important point we have to remember. So in every point, why it is written that located in the taxable territory, it is clear that the person, that it will be paid by the person in the taxable territory. See, it is just to give total clarity, because if it is not given in that in the taxable territory is located, there may be a confusion as to what it is supposed to be done. That is precisely why it is not covered on the taxable territory. Right. So yeah, any further queries here? Let me go to the admin panel. Yeah, so let's take a short break here, and we will see. I'll meet you after 10 minutes and continue our discussion. See you soon. Welcome back, everyone. Let us continue our discussion. Before that, let me see some more queries if need be. In services where service recipient is business entity, if they are provided to, yes, it forward charge will apply. You're right. Business entity where it is specifically provided, and if you're provided to any other individual, then it straight away the forward charge will be applicable. How are these supplies disclosed in GSTR1? Totally practical doubt, Naveen, you're asking. In GSTR1 returns chapter, you will see, but to give an answer to your question, the supplies which are subject to reverse charge mechanism, it is an inward supply. So therefore, once the moment it is an inward supply, you need not disclose it in your GSTR1. In your GSTR3B, you have to disclose it and thereby take the input tax credit immediately. You have to first make the payment through the cash ledger and then immediately claim the input tax credit in the GSTR3. Since it's an inward supply, you don't need to show it in your GSTR1. Mr. Harshad, registered person in Mumbai goes to Gujarat and does works contract like construction of building. I'll read it a bit slowly so that everyone understands. Quite a long query. Sir, if a registered person in Mumbai goes to Gujarat and does works contract like construction of building and does not take GST registration in Gujarat, okay, and raised invoice on them by charging IGST tax 50 lakhs, fine. Some material provided by the landlord of Gujarat for construction by charging CGST and SGST 40 lakhs as the place of supply is Gujarat. Can a person register in Mumbai who is doing the works contract claim CGST and SGST if he does not take registration in Gujarat? No, he cannot claim the CGST and SGST. The reason is place of supply. If you refer to my first session of order of utilization of credit, you should remember that CGST, SGST cannot be adjusted. CGST cannot be adjusted against SGST. One more thing, when one particular state, in your example that is Gujarat, charges CGST and SGST, CGST goes to the central government, SGST goes to the Gujarat government. Whereas this person is located in Mumbai. He has a registration in Mumbai. The moment he has a registration in Mumbai, if he pays the CGST and SGST which goes to the Gujarat, the system itself will not support. Okay, the system itself will not support you to claim that respective CGST and SGST because that has gone to Gujarat, right? So therefore, in this case, if this person wants to claim the input tax credit, he has to get himself registered in Gujarat with a separate GST registration. Only then he can claim the input tax credit. He cannot charge the IGST because in this case, place of supply will be in Gujarat, location of supplier and place of supply in the same state. Therefore, it is an intrastate supply. Okay, you will get more clarity. This such questions and doubts will be in the place of supply chapter in section 10, 11, 12, and 13 of the IGST Act. Right. Now coming back to our queries. Coming back to our discussion, supply of services by the members of overseeing committee to RBI. Overseeing committee is appointed in the RBI to look at the various banking practices followed by the financial institutions, etc. Such services which the members of the overseeing committee provide to the RBI, subject to reverse charge mechanism, tax is supposed to be discharged by RBI. Then services supplied by individual direct selling agents other than body corporate partnership or limited liability partnership or NBFCs to a banking company. Individual direct selling agents means everyone who keep on calling you and bugging us for loans, and everyone, they are nothing but individual direct selling agents. They have some tie-up with the banks. If they get a customer for them and the loan is sanctioned, the bank gives them some commission. So that is an individual direct selling agent. So they provide the services of getting the customers who are interested in loans to the banking companies. In such case, individual direct selling agent need not pay the tax on forward charge mechanism. The banking company has to pay it on reverse charge mechanism. Right. Then business facilitator to a banking company. Business facilitator, again, a person who gets business for the banks. It can be any sort of business like opening savings account, current accounts, overdrafts, loans, etc. And if he goes to another place altogether, assists in opening a branch to the bank, etc. and all of that. Therefore, in that situation also, reverse charge mechanism, that banking company is the recipient of service and they only have to pay the tax on the reverse charge basis. Then agent of business correspondent to the business correspondent. Business correspondent means, again, a person who is engaged in getting the business, opening another branch for the business, etc., he will appoint the agent, and the agent will provide the services to that business correspondent. That also it covers under reverse charge mechanism. Business correspondent will pay the tax on RCM basis. Then security services, I also took this example before we started this discussion on reverse charge. Security services, that is by way of supply of security personnel provided to the registered person. The supplier of service is any person other than a body corporate. Recipient service is a registered person. So any person other than a body corporate. So please remember, if a security agency is a body corporate, then continue forward charge mechanism will be applicable. But if a supplier of service is a person other than the body corporate, it can be an individual or a partnership firm, they provide the service to any registered person located in the taxable territory, it is subject to reverse charge mechanism. That recipient has to pay the tax directly. Nothing contained shall apply to the department or establishment or local authorities who's taking 51 for under registration under 51. So if you take registration under section 51 for TDS in that particular situation, and also a registered person who has opted for the composition scheme, in that particular situation it will not be applicable. So in the recipient of service, in this particular case, if it is a government, etc., who has taken the registration only for doing TDS under section 51, or any registered person who's opted for the composition scheme, in that particular situation, this particular clause will not be applicable. Reverse charge won't be applicable. I hope this is also clear. Then 15th one, renting of motor vehicle. So if you are providing a service of renting of motor vehicle designed to carry the passengers, where the cost of fuel is included in the consideration charged from the service recipient. That means you are giving motor vehicles on rent. Okay, you have motor vehicles with you. You are giving that on rent for the purpose of transport of passengers. In this particular situation, whatever amount you are charging from the customers, it also includes the cost of fuel. Okay, it also includes the cost of fuel. Cost of fuel is not separately given in the total consideration only. It is supplier of service is any person other than a body corporate. Again, does not issue invoice charging GST at 6%. This is very similar to GTA, Goods Transport Agency, that if he opts for the 12% situation, in that particular situation, there is no question of reverse charge mechanism. And the recipient of service is the body corporate located in the taxable territory. So in that situation also, reverse charge will be applicable. Then services of lending of securities under Securities Lending Scheme 1997. We also saw this clarification in the previous session. Lending of securities, if you are having the securities with you, if you are depositing the securities in any other name through the approved intermediary, recipient of service is the borrower who borrows the securities. In this particular situation, the recipient of service, that is the borrower of securities, has to pay the tax on the reverse charge basis on whatever fees he pays towards the particular lending fee. Right? For IGST purposes, some additional services are covered, which are clearly mentioned. This is with regard to IGST, some services. Any service which is supplied by any person who is located in a non-taxable territory to any person other than non-taxable online recipient. This non-taxable online recipient, we did the definition before we came into the subject. In that particular situation, that only relates to OIDAR services, online information database access retrieval services. So therefore, if any service is provided by a person who is located outside the country, so therefore this is something like import of services, right? If you are importing services other than OIDAR services, if you are doing any import of services, person located in taxable territory has to pay the tax on the reverse charge basis. So the serial number 1 in IGST is pure import of services. Then second situation, services by way of transportation of goods by a vessel from a place outside India up to the customs station of clearance in India. So therefore, supplier of service is a person located in non-taxable territory. What he is doing, once the goods come, vessel, that is in a ship from a place outside India, the vessel comes up to the customs station clearance. So therefore, that is a service of transportation of goods which is providing. The supplier of service is the person located in the non-taxable territory. Recipient of service is the importer located in the taxable territory. So therefore, in this particular situation, RCM IGST will be applicable. That is, the importer will have to pay the tax on the reverse charge basis. So renting of movable property, as I told you, cost of the fuel should be included in the consideration which is charged at 5% without ITC or 12% with ITC. That is same like goods transport agency. Director's remuneration, very, very interesting point. There was a massive controversy once this director fee was there in the reverse charge mechanism list. An authority of advance ruling, if I'm not wrong, is Gujarat or Maharashtra, I'm not very sure. So this authority of advance ruling, a question was posed. What is advance ruling? First of all, advance ruling is an authority which is created in case you have any query with regard to the GST provisions. You can apply to the authority of advance ruling, which is also known as AAR. They will give you a ruling saying that if you say that what is the place of supply in this case, if you have a doubt, they will give you a ruling, say that you can apply this to your case. So therefore, in this situation, what happened? The director was an employee. Director was an employee of the company, and he had a doubt whether if you are an employee of the company, whether it is covered under reverse charge or not. So he applied to the advance ruling, and to his surprise and shock, the advance ruling authority stated that even if you are a salaried person, then still this has to be paid on the reverse charge mechanism, which is quite contrary to what Schedule 3 of the CGST law says, where it clearly says in the course of employment, if you provide the service, there is no question, it is not a supply of good nor a supply of service, right? So this was the background. Later, what happened? A lot of petitions started going with regard to this for the government to issue a clarification. Then the government came out with a clarification. The government said that if any service is provided by independent directors or any other directors who are not employees of the company, to such company in lieu of remuneration, that means instead of remuneration, if they get any other consideration other than employee, if they are there, in that particular situation, they are outside the scope of Schedule 3 and then subject to GST under reverse charge mechanism. So how do you understand? When this director is an employee or when this director is a professional, we have to take the help of paper 7, Direct Taxes Income Tax Act. We have to see under which section the TDS is done, the tax is deducted. If the tax is deducted under section 192 of the Income Tax Act, in that particular situation, it is a salaried person, and therefore in that situation, the respective RCM will not be applicable, because clearly employer-employee relationship is applicable. So therefore, there is no question of an RCM basis. But however, if the TDS is done under 194J, that is professional or technical services, or 194H, which is commission, in that case, RCM is definitely applicable. Company has to discharge the GST, and the company has to discharge the GST on the RCM basis. Right? So that is some point with regard to director's remuneration. Now we come to, let me see now if there are any queries. I have to keep checking because a lot of discussions are going on. Sir, but CGST, SGST can utilize for IGST. Why not? CGST, SGST you can use for IGST, but not for some other state. If you are, and in this case, there is no IGST here. In this case, IGST cannot be charged. CGST, SGST only can be charged, right? So therefore, I know at the end of the end, it is going to the Gujarat government only. But the law is such that if you have a Mumbai registration, if it is going to Gujarat, the system does not allow you to claim the input tax credit, right? Anyways, Mr. Harshad, this aspect will be more clear to you when we do the place of supply chapter, right? In renting of motor vehicle services, cost of fuel is also included in consideration on which GST levy. Indirectly, GST is levied on petrol price. Beautiful query. So here, please understand, when I say when we say that petrol or diesel is outside the purview of GST till a date announced by the council, it means when I am selling the petrol, when I am selling the diesel, I issue an invoice for the liters of petrol or diesel. On that, the GST cannot be charged. But when I'm including the cost of fuel, in the consideration, in that particular situation, there is no clear way and there's no clear mechanism which clearly states that the petrol is being sold. It is just a consideration for the renting of a motor vehicle. So therefore, since there is no clear, even though the cost of fuel is included, you are not putting the invoice for charges for petrol. You are just say renting of motor vehicle, this is the price which you take. If you clearly mention petrol, then of course your point is correct. You cannot charge the GST on that particular product. Anyways, a very, very interesting question. I'm really liking the way in which your mind is functioning and listening to this and the wonderful queries which are keeping coming. And it shows that all of you are paying total attention to the class, which is how it is supposed to be. But I'm getting queries from Naveen, Namita, of course. Every class I get queries from you. Then Priya, Janki also is quite regular. And I hope all the Chetan and I hope all the others also are. No, Suraya also keeps asking, but Suraya keeps coming. Say 2-3 queries in one class. I suddenly see, but good to see that you are active. And Akash, of course, is the first class for you. So I'm expecting queries from you as well. And from all my other listeners, I really love to get queries from all of you. So keep asking me. I'll keep solving it for you as and when it comes. So now we come back to the topic here. Yeah. Now we look at 9 subsection 5, what exactly the section says. So first of all, e-commerce operator, as we all understand, is any person who owns or operates or manages an electronic platform for the supply of goods or services. Following categories are clearly mentioned. So please remember, for the purpose of 9 subsection 5, first of all, what does 9 subsection 5 says? That in case of certain specified services only, please remember, goods are not covered under 9 subsection 5, only services are covered. So therefore, specified services are given, which comes under 9 subsection 5, where the responsibility is given to the e-commerce operator for the purpose of discharging the GST. First one is services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle, etc., which is nothing but Uber or Ola. So here what is happening? Any transport of passengers is happening through the electronic commerce operator. The electronic commerce operator has the responsibility of collecting and discharging the GST. Second one, services by way of providing accommodation, hotels, inns, guest house, clubs, campsite, etc. for residential lodging purposes, except when the person supplying such service through e-commerce operator is liable for registration under 22 subsection 1 of the CGST Act. What does that mean? Simple example, Make My Trip. If you are booking any accommodation for residential or lodging purposes in hotels, inns, guest house, clubs, campsites, etc., please remember that in this particular situation also, the e-commerce operator is liable for, liable to pay the GST on the reverse charge basis. But one exception is if the person, that is the hotel who is tying up with the e-commerce operator, he is liable for registration, not even registered. If he is liable for registration itself, then itself he has to get himself registered, and this R9 subsection 5 will not apply. So therefore it applies only to the unregistered persons, unregistered hotels who are tying up with Make My Trip or Ease My Trip and providing the lodging services or residential services. Then the third one is, this is urban club, housekeeping services, plumbing, carpentering, etc., except where the person supplying such service through the e-commerce operator is liable for registration under 22 subsection 1 of the CGST Act. So housekeeping services, plumbing, carpentering, etc. is again this thing. Again, except where if the person is already registered, liable for registering the GST, this reverse charge mechanism will not be applicable. Now let us look at a few questions based on what we have discussed before we proceed to section 10, that is composition levy. All of you please try to answer these questions. Dr. Reddy Labs Private Limited agrees to sponsor a sports event organized by Hyderabad Golf Association in Hyderabad. The company has paid an amount of rupees 50 lakhs for such sponsorship of the sports event. Consequently, said event was named after the brand name of Dr. Reddy. Examine who is the person liable to pay the tax in the given case. Please try to answer this question. Is this list of e-commerce services exhaustive? See, the notification has provided these three services at the moment, but practically what is happening is the e-commerce operators, to be on the safer side, they are discharging the GST on each and every aspect, because Urban Club has multiple services. It has salons, it has masseur services, and it has multiple other services. Everything GST is being charged on reverse charge mechanism, but definitely the list of services needs an upgrade. More and more services needs to be added to this 9 subsection 5 notification. Right? That means unregistered hotel, if providing services through OYO, then OYO will pay GST, right? Yes, very true. OYO will pay the GST. Right? Answers for the question. So therefore, if you see here, what is happening is the sponsorship services. Sponsorship services again given by the body, given by the body corp, sponsorship amount given by the body corporate to this particular person. Amount is paid 50 lakhs for such sponsorship of the sports event. So the moment the amount of 50 lakhs is paid, you have to see who is the payer and who is the recipient. Recipient is Hyderabad Golf Association, which is a club, which is not a body corporate, and Dr. Reddy Labs Private Limited is a body corporate. 50 lakhs is paid. So this therefore comes purely under the reverse charge mechanism, and therefore in this particular situation here, who first of all you have to understand who is the supplier, who is the recipient. The supplier is Hyderabad Golf Association, because in return for the compensation, the event is named after the brand name of Dr. Reddy. So therefore, for that amount, he is giving that branding services. So therefore, the recipient of service in this case is Dr. Reddy's. So therefore, GST has to be paid by Dr. Reddy's Private Limited on rupees 50 lakhs. Now we come to the next one. Mr. Anil Kapoor is a director in Sonam International Private Limited. The company paid him the sitting fees amounting to rupees 25,000 for the month of January. Further, salary was also paid to Anil Kapoor amounting to 1.5 lakhs for the month of Jan, on which TDS was also deducted as per the applicable provisions under the income tax law. Harshvardhan and Associates, in which Anil Kapoor is a partner, supplied certain professional services to Sonam International Private Limited for an amount of rupees 2 lakhs. Discuss the person liable to pay the tax in each of the supplies involved in the given case. First of all, in this, you have to understand what are the transactions, and each transaction, what is supposed to be done. Yes. So therefore, what are the transactions which are involved here? I'll give you a couple of minutes and then I'll discuss the answer for this. So here what is happening? Anil Kapoor is a director. Sitting fees 25,000 is paid. So sitting fees is basically other than remuneration, not in the course of employment. Salary was paid to Anil Kapoor. So first transaction is sitting fees, which is paid to Anil Kapoor. The sitting fees what is paid is definitely subject to reverse charge mechanism, because the director sitting fees means what? The director attends the board meeting for which is paid that amount. TDS at the rate of 10% is deducted. But in this case, that point is maybe not mentioned because the TDS limit is 30,000 and 25,000 only is paid. So sitting fees GST will be applicable on the reverse charge mechanism. Salary was paid to Anil Kapoor amounting to 1.5 lakhs on which TDS is deducted as per the applicable provision. So clearly it is mentioned that TDS is done on salaries of this 1.5 lakhs. So therefore, since TDS is done on salary for this 1.5 lakhs, very much it is not covered under the entry. So therefore, it is first of all not at all a supply because it forms a part of Schedule 3 to the CGST law. Harshvardhan Associates, in which Anil Kapoor is a partner, supplied certain professional services to Sonam International in the month of January for the amount of rupees 2 lakhs. So this basically is a partnership firm in which he is a partner and it is providing the services to the company in which he is a director. So therefore, it is a supply of services to a related person for which 2 lakhs is charged. Now, again, the concepts in value of supply says that if you provide the services to a related person, open market value of supply is to be considered and all of that. But now let us not get into it. Let us now restrict this question only to the extent of whether it is a forward charge or the reverse charge. So therefore, in this particular case, nowhere it is such a transaction is contemplated on the reverse charge mechanism. So therefore, Harshvardhan Associates will pay the GST on the forward charge basis. Right? I hope these 3 transactions are clear for you. 3 transactions are there. In the answer, you have to cover all the 3 transactions. Again, in this particular situation, professional services paid to the company. So here, Anil Kapoor will not pay. Harshvardhan and Associates will pay. That is this thing. It says professional services, right? So that is the answer for this one. Any further questions? Any further answers for this? Yeah. Now we will move ahead. Next question. Suvidha Technologies is in the business of development of e-commerce platforms for various customers. Chennai Creations obtained the ownership rights of an e-commerce platform developed by Suvidha Technologies by paying a specified amount against the ownership rights of the said portal. Chennai Creations also entered into an annual maintenance contract with Suvidha Technologies for technical maintenance of the said portal. Chennai Creation supplies its own goods and services to the said portal to the ultimate customers. Examine who is the e-commerce operator in the given case as per the GST provisions of the GST law. Please try to answer this. Chandrasekhar, another question. How RCM can be paid on input transportation service received by a registered person? Okay. Whether on the basis of invoice received from registered person or on the basis of 2A, where transporter does not declare any RCM in GSTR1 but not taxable value. Again, a totally practical doubt. See, the beauty of GST classes is some of the questions are totally asked on what all doubts you are facing in your articleship or in your job. Anyways, I am always ready to solve those as well because it gives me an opportunity to learn the kind of queries what you're facing. So here what is happening? RCM on input transportation service received by a registered person. So in this case, what is happening? Input service I'm providing on reverse charge mechanism, I have to pay. First of all, in case of reverse charge mechanism, there is no question of GST or 2A anywhere because you have to first pay the amount and then claim the credit. So the moment you pay the amount and the moment you claim the credit, it will first come into the cash and disappear from the input tax credit. So therefore, in 2A, it will not be mentioned. So don't rely on 2A for reverse charge mechanism. It is not required as well. Reverse charge mechanism, you pay the cash and claim the credit. As simple as that. Right? So therefore, most of you got this answer also right. So let us examine this particular question. So how you have to answer this question is also very important. So here it clearly says that Suvidha is in the business of development of e-commerce platforms. First of all, if you say that the Suvidha is developing the business platform, here it is developing the platform and it is selling it to Chennai Creations. So once it is selling it to Chennai Creations, we have to see as to who is the e-commerce operator. Chennai Creations also entered into AMC. Just maintaining the annual maintenance contract doesn't give you the ownership. Chennai Creations supplies its own goods and services through the set portal to ultimate customer. Who is the electronic commerce operator? Electronic commerce operator definition is a person who owns, operates, or manages the electronic portal. Here it is very clear that Suvidha Technologies has made the e-commerce portal, but however it is sold it to Chennai Creations. So Chennai Creations, since the moment it owns, manages, or operates the e-commerce portal, it is basically the e-commerce operator. As simple as that, right? So again, if you look at the rates of GST, 0.125%, as I said, that is 0.25% including CGST and SGST is for rough diamonds, 1.5% jewelry, 2.5% examples, packed paneer, Indian sweets, etc. 6% is for fruit juices, computers, and mobiles. 9% hair oil, toothpaste, soap, 14% small cars, consumer durables. Services taxable at different rates means construction of complex and civil structure is taxable at 6%. Majority of the service comes under the 9% bracket only, including CGST, SGST, 18%. Supply of food, air-conditioned restaurant in 5-star hotel. 5-star hotel, it is not 5%, is 28%, right? 14% CGST, 14% SGST. Again, some information regarding the classification provisions. As I told you, classification of goods or services. For goods, it is done as per the harmonized system of nomenclature. It is a multi-purpose international product nomenclature developed by the World Customs Organization, right? So therefore, this is used for the purpose of classifying the goods in the invoice. So chapter heading, subheading, tariff item are referred in the schedules of rate notification. Rate notifications, no one will ask you what is the rate chargeable, this on that, not some memory class what is there, it's just CA examination. So therefore, don't break your heads in trying to remember the rates for each product. For services, new scheme of classification is developed. A common error or a common misconception which can always be done is the term HSN is used for services also in the examination or any practical purposes. Please bear in mind that for services it is not HSN, but it is SAC, that is Service Accounting Code. It is a modified version of the United Nations product classification. The services of various descriptions are given. So therefore, SACs are used for classifying the services. So with that, we come to the end of section 9, that is the chargeability section 91, 92, 93, 94 and 95. And apart from this, we also worked out some case studies based on what we did on the section 9 related topics. And now we come to section 10, that is your composition levy. First of all, why is this need for the composition levy? Please bear in mind that not everyone can comply with the provisions of the GST, because though the turnover may be high, the margins are very low. Classic example is your grocery kirana shop. In a kirana shop, the turnover will be huge because every day someone or the other will come and buying in the local neighborhood. The family houses will tie up with you. They'll take the products from you and everything. So therefore, turnover will be high. But is the margins were that high? Margins are very less. So since the margins are not very high, since the margins are very less, the respective shop, the owner of that store will have a very tough time. Okay, they will have a very tough time in complying with the GST provision. That is your filing of returns, your payment of taxes through the GST portal, input tax credit, and all of that is a very big hassle for the small scale businessmen. So for such people, for such businesses, the GST law, the government has introduced the composition levy. This composition levy in earlier VAT laws, when value added tax were there, in earlier VAT laws, it was also termed as turnover tax. So therefore, the same turnover tax has been replicated as composition levy in section 10 of the CGST Act 2017. So this composition levy, what does it say? 10 subsection 1. Let us go through the section first and then analyze what the section says. So notwithstanding anything contained to the contrary, subject to the provisions of subsection 9 subsection 3 and 9 subsection 4. Why do we say subject to the provisions of this? Because that 9 subsection 3 and 9 subsection 4 cover the reverse charge mechanism. So that will continue to apply. So therefore, if a composition dealer is there, he has an inward supply which is subject to reverse charge mechanism. He has to pay the tax on the reverse charge mechanism as well. But the disadvantages you will come to know shortly, that he will not be able to claim the input tax credit. So therefore, an important point is a composition scheme person should make sure that he does not have any inward supplies on which reverse charge is applicable. Only then he has to go for the composition scheme. Right. So a registered person whose aggregate turnover in the preceding financial year did not exceed 50 lakhs may opt to pay in lieu of the tax payable by him. Okay, instead of the tax payable by him, he can pay an amount calculated at the such rate as may be prescribed, but not exceeding 1% of the turnover in case of a manufacturer. So manufacturer, it is 1% of the turnover, 1% CGST, 1% SGST again, so that is 2% of the turnover. Then 2.5% of the turnover in the state or turnover in union territory. In case of persons engaged in making supplies referred to in 6B of Schedule 2, which is nothing but supply of foods and beverages or any other article for human consumption. That is your restaurant services. So restaurant services have option also to go for the composition scheme, 2.5% CGST, 2.5% SGST, which is 5%. But now this particular clause is now redundant. It is no more useful for the restaurant operators, because this clause was bought when the restaurant GST rate was 18%. But now that also has been reduced to 5% without ITC. So whether I go for that 5% without ITC or whether I go for this regular composition levy with, again, where there is no input tax credit, there is no difference whatsoever. So this 5% composition scheme rate for restaurants is not very relevant as of now. And then for traders, when it's 0.5% of the turnover in the state, in case of other suppliers, those refer to the traders. In traders, it is 0.5%. That is total is 1%, including the CGST and SGST. So this shall be the rates which is taxable. So provided that the government may by notification increase the said limit of 50 lakhs to such higher amount not exceeding 1 crore and 50 lakhs. So 1.5 crores is the amount to which this turnover can be exceeded. So initially it started off with 50 lakhs, then it became 75, then it became 1 crore. So the up to 1.5 crores is the limit which is applicable for the composition scheme. So this is exactly. Then provided further that a person who opts to pay the tax under clause A or clause B or clause C may supply services also. Again, this is the new addition which has been made. Okay. May supply services other than those referred to in 6B, which is nothing but the restaurant services of value not exceeding 10% of the turnover of in the state or the union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. Now, what is this? Basically, restaurant services straight away covered under composition scheme 5%. Now, there may be a situation where there is a person who is in manufacturer or a trader, and apart from that, he is also a small scale service provider. A classic example, a person is running a kirana store. Apart from that, he also has a commercial space from which he is getting the rent, right? So in that particular situation, just because he's providing this rental service, he's getting rental income from commercial property. Just because of this, he had to get himself registered under GST earlier. So later what happened? Considering the difficulties faced by such taxpayers, the government said that up to 10% of the turnover in the preceding financial year. So in the preceding financial year, if your turnover is say 40 lakhs, up to 10% of that. So up to 4 lakhs, you can also provide the services. You can also provide the services and apply the same rate of tax. That is 1% or 2% as the case may be. But it should not be more than 5 lakhs. That is the condition which is given. You provide services also. It should be up to 10% of whatever is the value, not exceeding 10% of the turnover in the preceding financial year, or 5 lakh rupees, whichever is higher. So preceding financial year, whatever is the total turnover, you take that. Of that, you calculate 10%. Up to or 5 lakhs, whichever is higher, to that extent, you can provide the services. This is what is given in the Act. Then, for the purposes of the second provision, the value of exempt supply of services provided by way of extending deposits, loans, advances by way of interest shall not be taken into consideration. Now, second proviso, if you see here what happens, the limit of 50 lakhs 1.5 crores is there. Here, for determining the value of that particular amount, the persons may also have interest income from fixed deposits. That particular amount will not be taken into consideration for determining the value. So therefore, only the turnover will be taken. If he has any interest income from fixed deposits, etc., it will not be taken into consideration for calculating the value of the turnover. This is the explanation which is given. Then, second subsection for section 10. The registered person shall be eligible to opt under section 1 if following conditions. So, he has to fulfill certain conditions. Only then he can opt for the section 10. Now, what are the conditions? Number 1, save as provided in subsection 1. That is, except as provided in subsection 1, that is your 10% clause. He is not engaged in the supply of services. So therefore, he should not be engaged in the supply of services other than what is given in subsection 1. Second one, he is not engaged in making any supply of goods which are not leviable to tax under this act, right? So therefore, a person can be eligible to opt for the composition scheme if he is not engaged in making any supply which are not leviable to tax. That means he should not be engaged in making any supplies which are exempt, right? So therefore, he should not be engaged in making any supply which are not leviable to tax. He is not engaged in making any interstate outward supplies of goods. There should not be any interstate outward supplies. So therefore, composition dealer means the moment he does interstate supply, he has to get himself registered under regular registration. So interstate outward supply, composition scheme is not permitted. The next one, he is not engaged in making any supply of goods through electronic commerce operator who is required to collect the tax under section 52. Now I have to go to section 52 again. See the reference of other sections. If you have one section, another section comes, you have to understand that section. What is section 52? Section 52 says that if any taxpayer is supplying the goods through the electronic commerce operator, the electronic commerce operator should collect a tax collected at source, which is TCS. So 51 refers to TDS deducted by the government, whereas 52 represents the TCS, which is collected at source, right? So therefore, this e-commerce operator should collect the tax at source. Should collect the tax at source. Okay. In this particular situation, if you are tying up with such e-commerce operator, then you cannot opt for the composition scheme. Simple example, Amazon app is there. In Amazon app, lot of sellers register themselves with Amazon and sell their products through the Amazon. When making the settlement to the person who sells through Amazon, Amazon collects the tax at the rate of 1%. Amazon receives the money from the buyer. Assuming Amazon receives 1 lakh from the buyer, 18% GST is collected. So 1,18,000. 1% GST shall be retained by Amazon. So therefore, on this 1,01,000 will be retained. 1,17,000 will be given back to the supplier. And this 1,000 what Amazon is retaining, Amazon should pay to the GST department and indicate the GST registration number of the supplier. This supplier, when he files the return, that 1,000 he will get it in his cash ledger. This is how practically it works. Coming back to our discussion. So therefore, if any person is there, he is registered in Amazon, okay, and the Amazon is collecting TCS, that person cannot opt for the composition scheme. This I feel is not a very, very good decision, because the person who is registering in an Amazon usually will be a small time person. So a small person, if he has to register with Amazon, he cannot opt for the composition scheme. That is the conclusion. He has to go for the regular registration. Thus, where is the purpose achieved? That you are minimizing the compliance cost for the small businessman? It is not achieved. So it is unfortunate. I feel this is a very, very harsh provision which is made. And is not a manufacturer of such goods has been notified by the government. Government has notified some goods like ice cream, aerated drinks, etc. On this, if you're a manufacturer of such goods, you cannot opt for the composition scheme. Then he is neither a casual taxable person or a non-resident taxable person. Casual taxable person, I already told you in today's class only initially, that if you are taking a temporary registration in some other state for the purpose of participating in any exhibition, etc., there you have to register yourself as a casual taxable person. So this casual taxable person cannot be you cannot opt for the composition scheme. Similarly, if you're a non-resident taxable person, take a temporary registration. You also, non-resident taxable person means a person who's outside the country, comes to India for some time, just sells and leaves. So you should also opt for a temporary. So if you are a casual taxable person or a non-resident taxable person, you cannot opt for the composition scheme. Then, provided that where more than one registered persons are having the same PAN number, registered person shall not be eligible to opt for the scheme unless all such registered persons opt to pay the tax under that subsection. What does this mean? Now, if a person has one PAN number, he has more than one GST number, he can opt for the composition scheme. If he opts for the composition scheme, all the GST numbers which he has should go for the composition scheme. He cannot do something like one GST number is a composition scheme when one is under the regular scheme. I hope you got this point. This is also a provision which is there. So moving forward. Yeah, these are the now second, another important provision, 10 subsection 2A has been introduced. What happened when composition scheme was introduced? First, manufacturers and traders were covered. Later, restaurant services were brought into the purview. But the small service providers were excluded. Small service providers. So therefore, this 10 subsection 2A brought into its purview small service providers also. So what does the section say? Notwithstanding anything contrary to the section, again subject to the provisions of 9.3 and 9.4, a registered person not eligible to pay the tax under subsection 1. So mainly for you to get covered under 10 subsection 2A, you should not be covered under 10 subsection 1 and 10 subsection 2. Whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees. So your turnover should not be more than 50 lakhs. Instead of the tax payable under 9 subsection 1, he can pay the tax calculated at the rate of 3% of the turnover. That means 3% CGST, 3% SGST. 6% is the tax which is applicable on small service providers who are not covered under 10 subsection 1 and 10 subsection 2. Again, the conditions which are given are pretty much the same as what conditions are given under 10 subsection 1 and 10 subsection 2. First is, you should not make the taxable supply of services not leviable to tax. He's engaged not if he's not engaged in he should not be engaged in maintaining interstate supply. Interstate supply should not be done. Same e-commerce operator. That means a restaurant who is tying up in Swiggy cannot opt for the composition scheme. Restaurant tying up in Swiggy, cloud kitchens cannot opt for the composition scheme, because Swiggy also is required to collect the TCS at the rate of 1%. A manufacturer of such goods as may be notified on the recommendations, casual taxable person or a non-resident taxable person. Same thing again, if you have more than one GST number, everyone should opt for the composition scheme. So that was the section. Then 10 subsection 3 mentions regarding the lapse of the option. The option which is availed by the registered tax person under 10.1 or 10.2A shall lapse with effect on the day on which his aggregate turnover during a financial year exceeds the limits. So once during the financial year the limit is exceeded, that is the last day on which the option is available. Then another important point, 10 subsection 4, a taxable person to whom subsection 1 and subsection 2A applies will not collect any tax from the recipient of the supply. So this 1% or 2% or 5% or 6%, you have to pay it from your own pocket. You are not supposed to collect it from the recipient of supply, and also you cannot claim the input tax credit. If a proper officer has reasons to believe that the taxable person has paid the tax despite not being eligible, he shall, in addition to any tax under other provisions of the Act, liable to penalty as well. So a person, if you if you pay the tax under 10(1), even if you're not eligible, but you went ahead and paid the tax, the proper officer will have all authority to impose the tax from you and also penalty under 73 or 74. Right? Then explanations. Value of supplies for aggregate turnover, first day of the financial year to the date on which he becomes liable to registration under the Act, shall not include value of exempt supply, that is interest on fixed deposits, etc. should not include. Then for the purpose of determining the tax payable, the turnover in the state or turnover in the union territory will not include the value of the following supplies: the supplies from the date 1st April to the date it becomes liable for registration, and exempt supplies also will not be covered. So therefore, what is the objective of composition scheme? The objective of the composition scheme is to bring into the tax net and to give relief to the small scale businessmen, to provide the ease of compliance from filing of multiple returns, to eliminate the compliance of input tax credit, and also to make sure a hassle-free GST compliance from the small scale businessmen who do not have the means to afford a regular GST registration and its associated compliances. Elimination of complications of classification. There is no requirement of classification of the products. There is no requirement of mentioning the HSN code. There is no requirement of mentioning any technical aspects and classification. What is the rate of GST applicable, this and that. As long as it is taxable, you can opt for the composition scheme and pay the tax at the rate of 1% or 2%. Quarterly payments. You need not pay the amount on a monthly basis. In case you are a regular GST payer, every month you are supposed to pay the GST. But in case of a composition taxpayer, the payment is required to be made once a month. So that is another important issue. Then registered persons making interstate supplies through e-commerce operator. As I told you, this is not covered in this. And the turnover limit, what has been finally fixed, is for manufacturers, traders, and restaurant service, it is 1.5 crores. And for other service providers, it is 50 lakhs per annum. So therefore, 10 subsection 1, the limit is 1.5 crores. 10 subsection 2A, the limit is 50 lakhs. Right? So therefore, to summarize, manufacturers other than manufacturers of such goods, ice cream, pan masala, tobacco products, these three are excluded. These three you cannot, even if you're a manufacturer of these three products, you cannot opt for the composition scheme. So therefore, 2% is the rate for that. Restaurant service, it is 5%, as I told you. Any other trader or supplier, it is 1%. Other service provider, it is 6%. Right? So any further queries till now before we go to the procedural aspects? Chennai creation, e-commerce operator, yeah. Sir, is there any goods or services on which 40% GST is charged? Not 40% GST, straight away it is not termed as CGST, SGST, but on motor cars, luxury motor cars, 28% GST and compensation cess also is charged, which just comes to around say 35 to 38% net. That is the applicability. Other than that, I don't, have practically seen any on which 40% is charged. Luxury cars is definitely one aspect. Sir, is the turnover from overall business or the turnover of that service for the 10%? Overall business turnover of the last year has to be reckoned for calculating the 10%. Sir, but a person selling through e-commerce transform that he may be making interstate supply. It is not necessary. See, e-commerce operator, you may also make the intrastate supply. Yes, I agree. That is the logic behind not allowing the persons who are tying up through e-commerce operator to opt for the composition scheme. But there must be devised a method. See, an e-commerce operator can also have a terms and conditions with the local seller saying that in my app, I will allow you to do only local sales. Okay, so then there is no question of interstate supply. So therefore, in this particular situation, there is a loss to the small scale businessman, because if he has to tie up with Amazon, Amazon insists for a GST registration, regular GST registration, not even a composition scheme. Sir, in a restaurant is providing alcohol, will it not apply for the composition scheme? No, as I told you, in composition scheme, straight away, what is the turnover of the product? Since alcohol is nowhere in the purview of GST, the restaurant is serving alcohol. That is not even an exempt supply. It is not a supply at all, straight away told from the constitution. So therefore, turnover of only the food is supposed to be taken into consideration. So turnover of small trader, he came to know at the end of the financial year. So during the year, his turnover crosses, but he did not charge GST on subsequent sales. What are consequences? I didn't understand. So turnover of small trader he came to know at the end of the which turnover he came to know at the end of the year? Acha, that he has crossed 1.5 crores. Okay. During the year turnover crosses, he is not charged GST on subsequent. Consequences, he has to pay the GST. If notice is issued by the department, once his threshold of 1.5 lakhs is crossed, he is not liable for 10(1) and 10(2). He is supposed to register on regular. So consequences was on whatever sales he has made, he has to pay that 18% GST. Yes, he'll be eligible to input tax credit also in case the respective persons have filed their GST returns and it is visible in his GST portal. Then ITC also will be available. That apart from the penalty under 73 and 74 of the CGST. 73, 74 deals with the penalties and prosecution. On that also it is very much applicable. Yeah, these are all just the procedural aspects, not very important from exam point of view. Just we'll just run through fast. Intimation by a person applying for registration who is not registered, he may option part B of the registration form. You have to apply for the composition scheme, and such intimation after registration is granted, option pay for paying under composition scheme will be made immediately from the effective date of the registration. Then a person who opts to pay the tax under the composition scheme prior to the commencement of the financial year. See, basically from next financial year, that is 1st April 2022, you want to exercise the composition scheme for that year. Before 1st April 2022, you have to exercise that option in form CMP01. This form is the form where you exercise the composition scheme before the commencement of the next financial year. So therefore, instead of paying the tax on every invoice, percentage of turnover will be calculated. Every quarter he will pay the tax. End of the quarter, he will also pay the tax without availing input tax credit. Registration under GST law is compulsorily for opting for the composition scheme. Right? Two types of composition, as I told you, for goods and for services. 10(1) turnover limit of 50 lakhs, but it is now raised to 1.5 crores after the GST Council has recommended. For set power, for 1.5 crores is the latest turnover. That is the highest amount which the government can go up to. It has gone. Turnover limit for composition scheme of goods. Turnover for the special category states. For these 8 particular states, it is 75 lakhs. Arunachal Pradesh, Uttarakhand, Mayapur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. It is 75 lakhs. This you have to remember. There is no other option. Assam, Himachal Pradesh, and Jammu and Kashmir, it is 1.5 crores. So therefore, these are the turnover limit for the composition scheme. All India basis turnover has to be calculated, linked to the same PAN number. 10(2)A for services, the limit is 50 lakhs in the preceding financial year. That is when he'll be eligible for the composition levy. Option shall lapse with effect from date on. So the moment the aggregate increases the threshold of 50 lakhs, straight away the option will lapse. So what all has to be covered in the aggregate turnover? Taxable supplies, exempt supplies, export of goods or services, interstate supplies, and exclusions is inward supplies on which it is paid on the reverse charge basis. That should not take. Right? And also the turnover should exclude amount between April 1 till the date on which he becomes liable to register. So aggregate turnover only for last financial year has to be taken into consideration. After that, he becomes liable for rest. Then after that, once you opt for the composition scheme, from that fresh, this amount will be calculated. Right? Now let us take an example. Okay. Illustration. Photographer Mr. James Bond has commenced providing photography services in Delhi from April during financial year 2021. His turnover for various quarters till December is as follows. April to June 20 lakhs, July to September 30 lakhs, October to December 20 lakhs. Easy eligible for composition scheme. If your answer is yes, what will be the tax which is required to be paid by him? Please try to answer this. Yeah, some answers for this. See, this question is slightly tricky. So what is happening here? See, if you see photographer James Bond has commenced providing photography services. So first thing what you have to see, whether this transaction is covered under 10 subsection 1 or 10 subsection 2 or 10 subsection 2A. Since it is a service other than the restaurant service, it is covered under 10 subsection 2A. The moment it is covered under 10 subsection 2A, what you have to see is whether in the aggregate turnover has crossed rupees 50 lakhs in the preceding financial year. So therefore, till in he's telling during financial year April he has commenced. So therefore, April to June it is 20 lakhs, July to September it is 30 lakhs, October to December it is 20 lakhs. So the moment it so now first what you have to do in the previous year whether it crosses 50 lakhs. If you see he has commenced it only from April. So therefore, last year it is nil. So is definitely allowed to opt for the composition scheme. The moment is allowed to opt for the composition scheme, first of all, next question what you have to see, when he is liable to register. Till 20 lakhs, he is not liable to register on. So April, May, June 20 lakhs is not liable to register because the threshold limit for registration is 20 lakhs. The moment it crosses 20 lakhs, can you register? He has to register. Can he opt for the composition scheme? Very much he can opt for the composition scheme. So April, May, June, the moment it crossed 20 lakhs, he got himself registered. Okay, this is what he has to do. He got himself registered, opted for the composition scheme. What is the aggregate turnover from April to June? 20 lakhs. July to September, 30 lakhs. So therefore, till 50 lakhs September, he is eligible to opt for the composition scheme. Because for 10 subsection 2A, the limit of aggregate turnover for which he has to opt for the composition scheme is 50 lakhs. So composition scheme can be opted for 30 lakhs. This is the, so eligibility for composition scheme can be done till September. So amount what he has to pay is 30 lakhs into 6%. That is 1,80,000. But in September, it is crossed 50 lakhs. So therefore, the option to go for the composition scheme will lapse. So therefore, on the balance 20 lakhs, that is October to December, he has to pay the tax at the regular rates. Right? I hope this question is clear for everyone. Right? So therefore, up to September, 6% he can pay and later he cannot. Right? Sir, as composition till September to turnover, okay. Once a composition scheme supplier need not engage in supply of goods. So if restaurant providing will composition scheme not apply? So definitely. So if the restaurant is providing the liquor services, but again, liquor services is first of all, there is taxable supply, there is exempt supply, and there is non-GST supply. So liquor is something which is non-GST. It cannot be taxed in the future also. So therefore, in this particular situation, the restaurant is providing regular foods and any other exempt service, it cannot opt for the composition scheme. But if it is provide this service and as well as alcohol, definitely it can opt for the composition scheme. That is my view. Let us wait for any clarifications from the department regarding this, because it says not leviable to tax. But in case of alcohol, it is not a supply only when it comes to GST, because it is excluded from the purview of GST. So therefore, even if it is alcohol, the composition scheme can be levied. Yeah. So further important points, who are not eligible for composition scheme? Supplier of goods not leviable to tax. This is what I was discussing. It says supplier of goods not leviable to tax. When I say not leviable to tax, that is the exempt supply. Supply of interstate outward supply. However, I'll give the further clarity on that. Let me see if there is any clarification which has come, and I will clarify that point for you, Namita. Once again, a brilliant query. Supply of interstate outward supply of goods. This also, it is not eligible. Persons supplying goods through an e-commerce operator. This also not eligible. Manufacturer of ice cream, pan masala. We have covered all of this. Just it is a recap. 10-2A also is pretty much the same. All these things they are not eligible to opt for the composition scheme. A person engaged in marginal supply of services other than restaurant service. This is your 10 subsection 1. This is that 5 lakhs limit what I was talking about. So with a view to enable the taxpayers who provide small amount of services apart from your regular supplier of goods, marginal supply of services was permitted for a specified value along with the supply of goods and the restaurant services as the case may be. What is the specified limit which is applicable here? It is 10% of the turnover in the state or union territory or 5 lakhs, whichever is higher. 10% of the turnover or 5 lakhs, whichever is turnover in the preceding financial year you have to see. Example, Mr. Warner is engaged in supply of goods. His turnover in the preceding financial year is 60 lakhs. He wants to start providing some technical consultancy services. He asks your opinion on whether he can do so. Definitely he can do so, but 60 lakhs, 10%, 6 lakhs or 5 lakhs, whichever is higher. Up to 6 lakhs, he can pay it during this particular year. Rules for registration, we have already seen this year. These are all procedural provisions, not very important from the examination point of view. Intimation has to be filed prior to the commencement of the year, and also he has to furnish a statement of the sales. Again, these provisions have to be fulfilled. Again, reverse charge mechanism will continue to apply even for a person opting for the composition scheme. He should not be engaged in manufacture of restricted goods, that is your ice cream, pan masala, tobacco, and he shall mention the words composition taxable person not eligible to collect tax on supplies. He has to issue a bill of invoice, a regular registration bill of supply. A regular registered person will issue a tax invoice, whereas a composition person who has opted for the composition levy will issue a bill of supply. On that, he has to clearly mention composition taxable person not eligible to collect tax on supplies. He will mention it on every notice or signboard in the place of the business. Option will be valid as long as conditions are fulfilled. The day it exceeds the limit, the option exercise the composition scheme lapses. Once he stops to satisfy the provisions, regular provisions will apply. He has to file an intimation also saying that the regular scheme is applicable for him. Validity of composition levy. Notice will be issued to the person in case the GST officer has a reason to believe that he is not eligible for section 10. A notice will be issued to the taxpayer. Taxpayer should reply to the show cause notice giving his reasons. Opportunity will be given to the taxpayer for being heard, and later the order will be issued. The composition scheme should be adopted uniformly by all the registered persons having the same PAN number. Again, input tax credit cannot be claimed. Penalty also is applicable in case of irregular availment of the composition scheme. Right? These are some important points which you have to remember. Right? So now, since we are short of time, let us try to work out some queries here, some problems here. Examine whether the suppliers are eligible for composition scheme under section 10 in the following independent cases in the beginning of the current financial year. Technology enterprises related registered in Jalandhar, Punjab, is engaged in manufacturing computer systems. Aggregate turnover in the preceding financial year is 125 lakhs. Okay. Technology enterprise supplies the computer system manufactured by it within the state of Punjab only. With a view to expand its business operations, it will also start providing the repairing services of computer systems in the current financial year. So please let me know whether this technology enterprises is eligible to be registered for the composition scheme. Please try to answer this question. Yes, I will share the presentation. Don't worry about that, Rajesh. This because there were some last minute notifications which has to be added, and hence the delay. I will share it immediately post the class. Don't worry about that. Yeah. So therefore, in the first situation, if you see his turnover is 125 lakhs. So therefore, since it is less than 1.5 crores, he can opt for the composition scheme. But during the current year, if he wants to provide any repair services, he can do it only to the extent of 10% of whatever turnover he has achieved in the previous year. So therefore, up to 12.5 lakhs, he can do the repair services. Then he is very much eligible to opt for the composition scheme. Then, Messr Siddharth and Sons, registered in Delhi, owns a restaurant Tasty Foods with a turnover of rupees 1 crore 12 lakhs, 112 lakhs in the preceding financial year. In view of the growing customer demand, it will also start intra-state trading of juices in Delhi. So therefore, this is again, see, he owns a turnover of 1 crore 12 lakhs. Restaurant service is covered up to 1.5 crores. So 1.5 crores restaurant service is covered. He wants to start trading. He can definitely start. He can definitely opt for the composition scheme. And therefore, there is no restriction because last turnover is less than 1.5 crores. Apart from restaurant service, you can do trading also and go for the composition scheme. Sitaram Associates, registered in Sikkim, is engaged in running a food chain, Veg Kitchen, in the state. It has a turnover of 73 lakhs in the preceding financial year. In current financial year, it decides to shut down the food chain owing to huge losses being incurred in the said business. Instead, it will start providing intra-state architect services, whether it can opt for the composition scheme. Yeah, will there be a class on Sunday? Namita, no. When I checked upon the topics, I think 2 sessions are very much sufficient for this. Only thing is, so there won't be any class on Sunday. Your usual schedule is as applicable. The next class will be on Tuesday, but however, we can expect that class to slightly go more than 9 p.m. So just maybe say 10-15 minutes here and there. We'll be able to complete everything without any hassle. No, in this particular situation, it's not 11.2 lakhs because there is no restriction. See, restaurant service is up to 1.5 crores. Trading and juices is not a services. So there's no question of 11.2 lakhs. You can do anything up to 1.5 crores. Of course, both restaurant and trading and juices can be done up to 1.5 crores. There is no restriction. Don't worry about that. Right? So what about the Sitaram Associates question? Can they start providing the architect services? So therefore, in case you want to provide the services other than the restaurant services, it has to be clearly covered in 10.2A. So 10.2A is 50 lakhs is the amount for the architect services. Since it is more than 50 lakhs in the previous year, therefore the option for claiming the composition levy is not available. DEC Services Limited, registered in Uttarakhand, is exclusively providing hairstyling services. Turnover of 34 lakhs in the preceding financial year. Will your answer be different if DEC Services also starts supplying beauty products along with providing hairstyling services in the current financial year? Now, any further queries? Any further answers? Yes, sir. Surely you can extend the class. No problem. Thank you for your support. But I want your attention to be the same as it was in 6 p.m. and at 9:15, 9:30 p.m. also it should be the same. Only on one condition I will extend the class. If there is any slight dip in concentration, I will not prefer to do it. Right. So in this particular situation, Deepti services turnover of 34 lakhs. If you want to supply hairstyling services, very much allowed because aggregate turnover is less than 50 lakhs. So will it be okay if they also start supplying beauty products? There is no problem whatsoever because the conditions which are given in 10(2)(a) for ineligibility, in that there is no condition like they should not supply the products up to the turnover of 50 lakhs. You can do whatever you want, right? That is the logic behind this one. So with this, we come to the end of this class. Let's go through this problem, slightly bigger problem and elaborate problem. So we'll just go through this and we'll work out this problem once the next class, once we meet on Tuesday. B&D Company, a partnership firm in Nagpur, Maharashtra, is a wholesaler of taxable product P and product Q exempt by way of notification. Now, this firm supplies the products only in the eastern part of Maharashtra. All procurements of the firm are from the suppliers registered under regular scheme. Firm pays tax on the composition scheme. B&D Company has furnished the following details with respect to the turnover. Turnover P 60 lakhs for 36 quarter, 39 quarter 50 lakhs. Turnover Q 1765,000, 39 is 17 lakhs. Here P is taxable and Q is exempt. Extract of the bill book shows the following. So these are all the sales which are made. So in this question, you should try to basically, when the limit is exceeded for the composition scheme, for that reason, all this is clearly given. Further, it also paid freight of 1,40,000 between the period April to October. Assume equal amount of freight is paid on each. Compute the GST liability of B&D Company for period under the composition scheme under 10(1)(2) and section 10, showing calculations for each quarter separately. Right. So please try to work out this problem. I'll share the PPT immediately now itself without any further delay, and so that you can try to work out this problem, and then we can discuss the solution on Tuesday's sessions. Just give me around 5 minutes so that I immediately share the PPT without further any delay. Just give me a minute. I'm just sending across the email. Yeah, I've shared the session to you, so you will be able to get that. And any further queries before we wind up for today's class? How Sitaram case covered in 10(2)(a)? Good question. So in this particular situation, let me just open the question one more time. No, Sitaram is a veg kitchen. He's earning turnover of 73 lakhs. He decides to shut down. So this year he is providing architect services. So he is providing the architect services this year. So the moment he provides the architect services, he is covered under 10(2)(a). That is why he is covered under 10(2)(a). I hope this point is clear. No, 1.5 crores will not apply because he is providing a service under 10 subsection 2A. So that is the logic behind it. Since he is providing the service in the current year in 10 subsection 2A, that is why the limit as per 10(2)(a) is applicable. So thank you very much for attending this session. I hope all the queries are addressed. Please feel free to post more and more queries, and we shall discuss all of them. I'll see you on Tuesday at 6 p.m. Once again, thank you very much for attending today's session. And please, everyone, take care of yourself, study well, prepare well. I'll catch you again on Tuesday at 6 p.m. to continue the problems based on what we studied today, and also to start and complete exemptions from GST, that is chapter number 4. Thank you very much. Good night, everyone.